Hello traders, welcome to another live stream on the Trader Nick channel and the A1 Trading channel. So I can see people are starting to join. We have a lot of people on the Trader Nick channel, so that's the main sort of source. If you have any questions, any concerns, anything you want me to cover, do put it in the comments because I have the comment section on the side and I'm watching it, I'm reading it. Good morning to everyone. Good morning from Florida. What's it like in Florida? Is it very hot? If I'm being honest, I always wanted to visit Florida. It seemed like the best part of the States. Well, at the moment, at least. I used to be a fan of the West Coast, but I think the West Coast is pretty screwed up at the moment. But I digress. So let's focus on the markets. I'll just focus on, let's say, starting the Monday analysis and watching what we can see on the breaking news section and going through some main ideas that I have for this week. So if we just briefly scroll through financial juice, that's something that I usually do once per day. And especially at the beginning of the week to see what happened over the weekend. So I usually go to the market moving. Now, the latest one was something about the Middle East, but not that important. Then we had some US retail sales, which kind of moved the markets a little bit, but not by much. Then I focus on Forex. So we have reports on the approval to extend the 60-day period between Iran and America. This is, I would say, just noise. Doesn't matter much. And I just focus on the stuff that is in red. So we have some Chinese news, which I don't really follow. Japanese stuff. I don't think we had much over the weekend, if I'm being honest. We have some Trump stuff. So Trump had a press conference, I'm guessing, on Friday. Yeah, we don't have much. We don't really have much. The best indicator for the Middle East is just price of oil. So pure price of oil. If you're focusing on Brent, why do we have this update available? Let's see, can we update this? Okay. And I probably need to make this an SMA. So for the 200-day, I should probably put in an SMA. I've been using the EMA, but the SMA should be a bit more accurate because the big players, the institutions, they use the simple moving average. So let me remove this. Let's go to indicators. Let's go to SMA, simple moving average. Let's make it a favorite. SMA 200. And let's put it in red. Style, red. Yeah, that makes more sense. So oil, not doing much. Staying elevated inside of this range, that's your main indicator for the Middle East. You know, if oil is going to be elevated, if it is going to be a problem, it is going to go above, let's say, 95, 100, 105, probably out of this range. In my opinion, if we can stay inside of this elevated range, so above 85 and below, let's say, 110, it'll be okay. It'll be fine. The effect of that won't be as bad as all of the analysts paint the picture to be. So essentially, if you follow the analysts and the experts on oil, right in March when the conflict started, they were saying that it's going to be a doomsday. They were saying it's going to be like an Armageddon. It's going to have huge implications for the markets around the world. Well, that didn't really happen, right? Instead, the inflation did go up a little bit. If you look at inflation, CPI. So inflation did go up a little bit. 3.3, 3.8, 4.2, but then it started to trickle lower. And it's now at 3.4, even with the straight being closed. And the straight is still closed. I can show you. So if we go to Hormuz's traffic or Hormuz, let's take a look. Yep. So it's still closed. The last update was August 9th. We're supposed to get an update soon, but it's probably still going to be near zero. And the transit trade volume will be near zero as well. So I would say this is not a massive issue. It's not a massive problem. We can kind of put the Middle East in the rear view. I would definitely ignore all of the headlines that you get from Trump and all of the announcements that a deal is in place, because the deal is not in place, right? So I would just focus on the data, the Fed, stocks, gold, dollar being weaker. I would focus on those themes. So the conclusion would be we can put the Middle East behind us. So the next thing I want to look at is, let's mention crypto for a moment. Crypto still below the 200. The saying is, nothing good happens below the 200 EMA. Now that seems to be the case with Bitcoin here. One more problem that I see is, so stocks went up. Gold had a breakout to the upside. So if you go to the S&P, stocks are at all-time highs, looking very constructive. Gold had a nice breakout to the upside, nice move, still below the 200 SMA. Okay, still below. I had the EMA in place, but the EMA wasn't really the most correct thing. So the SMA is what most people look at, and gold is below the 200. Okay, but it did have a breakout. Bitcoin is still staying flat, still staying very range bound. So it's not really reacting with the risk on assets. And I would say that's a big sign. I would say that's a big problem. And it is telling us that the momentum in crypto is not there, that we have a crypto, so we have a crypto winter, right? And then let me also show you something. It is the Bitcoin halving cycle. So I'll try to find it here in the background. I have it in my Discord. Just a second. So let's try to open in browser. Okay, I got it. Now I just need to copy it to a different window like this. Here it is. So this is the Bitcoin halving cycle. And you can see we already had 3 halving cycles in the past. So from 2012 to 2016, 2016 to 2020, 2020 to 24, and the current one is 24 to 28. It is a 4-year period. Don't ask me what it means exactly, because I'm not a crypto expert. Best to talk to Google Gemini or ChatGPT. But what you can find is, if you do some backtesting, there is a bullish part of the halving cycle, there is a bearish part of the halving cycle, and then another bullish part. So it's kind of split in three sections. We are now in the bearish part. See, we are now here. So this is the 24 to 28, and we are here, which is the bearish part. 3 times before, the price went down in this period, and then there's the rebound time. See, October rebound time, October, November, something like that, and that is when the price starts to appreciate again. It's a rough estimate, okay? It's not like set in stone. It's a rough estimate. So it could be the case that we need to wait for October, November to start the rebound time and to start the bullish part of the cycle again. But the best part is the initial part. So you can see the the initial part right here was kind of the best. It had the most meat on the bone. So to get the most bullish effect, you would need to wait for 2028, or you would need to wait for 2029 to start. That's when the price is telling us that it is most likely to have a big move up. So in 2029, with the start of the next halving cycle. So that is what I see on Bitcoin. I'm leaving it alone at the moment. I need to see better price action. I need to see more constructive moves there. Gold is the next one. So gold, I do like it because I'm betting on a dovish Fed, and a dovish Fed is bullish for gold. A dovish Fed is also bearish for the US dollar. So you have the US dollar here. So as the dollar goes down, gold tends to go up, right? So gold is paired with the dollar, which means automatically as the dollar loses value, gold should be going up. I don't want to enter here. I would like to get a bit of a pullback, maybe 4,300, maybe even like 4,200, something like that. That would be a good level in my opinion. But another problem is that we are below the 200 SMA. So that's definitely a problem because, as I mentioned, the saying is, nothing good happens below the 200 SMA. So if we can get a bit of a breakout to the upside, a bit more constructive price action, it would be better. But I think I would still be happy to take a stab long, even at this place, if we get a pullback. So if we go to the top setups, let's take a look at gold. So very bullish. A very bullish read, which is great. I definitely want to go with the edge finder. It's a massive confluence, especially on gold. I know it had a really good success rate in 25. So I'm saying that will continue. And this is definitely a big confluence for me to buy. By the way, if you want to get the edge finder or you want to join the A1 Trading Discord, you can find all of the links in the description of the stream. And you can use the code Marco to get 15% off. So code Marco gets you 15% off. All of the links are in the description. If you don't believe my sort of review for the Edge Finder and the A1 Trading Discord, definitely read the Trustpilot. Okay, Trading Trustpilot. Anything that you buy online, you should check the reviews. So if you just go to A1 Trading, 4.8 out of 5, which for this niche is, I would say, amazing. Trading niche is very tough to get good reviews. 242 reviews, which is a good sample size. The 5-star to 1-star ratio is very healthy, I would say. I mean, compared to other communities or software in the industry. And read through the reviews. Okay, definitely have a read through the reviews. Join the Discord. You can even join for free, which is something I also want to mention. I'll post the link to join for free. Give me 1 second. So stream links, free Discord. Let's go to the comments. So to join the free Discord, there is a link in the comment section, or you can also find that link in the description as well, description of the video. So those are your options. You can join for free, test it out, see how you like it. Or if you want to get the Edge Finder, and if you want to join the A1 Trading Discord, the pro section, sorry, get all of my trades. There's Nick, Chris Pulver, Iwind, Alan, and a bunch of other good traders. So you can get 15% off with the code Marco. Let's continue. So my game plan on gold is I have an alert set at 4,300 and I would like to participate. So I would like to get in on a buy position. I have a trade running on Swiss yen. I closed 60% of this position and I'm letting 30% run because I'm betting on continued yen strength. Okay, I think that will happen. So continued yen strength. Not looking super promising at the moment. I did trail the stop loss to 198.055. So we will see how that plays out. But yeah, Swiss yen seems to be a good one to short. The swaps are maybe even positive depending on your broker. So it's the best thing to sell against the yen, because if you sell USD JPY and you hold it for a long time, you will experience very negative very negative swaps, not stocks, sorry. So negative swaps. You can check the swaps in the carry trade scanner. So you have macro scanners, carry trade scanner, USD JPY. See, if you sell this, you will pay 3%. So if you buy this, you will receive 3%, but if you sell, you will pay 3%. While with Swiss yen, the positive swap is when you sell. Now the broker slaps on an extra fee on that, so depending on the broker, it may be just break even or a little bit negative, but it's still the best one to sell. If you're bullish on the yen and if you want to hold it for longer, for a long term, Swiss yen is the way to go. So that's what I have for Swiss yen. I have the Aussie dollar on my list. If you're in the A1 Trading Discord, you would know that I did take a stab long before the previous CPI print. I closed that one for break even, and looks like I probably should have held. So the Aussie dollar does seem to be it seems to be going up today, seems to be performing really well, and in my opinion, it seems to be the best currency pair to buy at the moment. Well, maybe not buy here because the price is kind of overextended, but the fundamentals are the best. So if we go to the top setups, let's take a look at AUD USD. Very bullish, score of 7, very nice. The RBA is hawkish. The Fed, I believe, will be more dovish than expected. This is what I think. So RBA being hawkish, that is bullish for the Aussie dollar. The Fed being more dovish than expected, that is actually bearish for the dollar. So the best thing to buy, Aussie dollar, right? And RBA was like that in the last meeting. So that meeting was, I think it was last week actually. Let me run through the calendar. Let's take a look. News calendar. Let's go to last week. Yeah, so the RBA was on Tuesday, August 11th, and basically it was hawkish. Hawkish. They announced possible rate hikes in the future, so they had hawkish forward guidance. Now, what is the game plan here? So I'm not in this position. When can I get in? How can I get in? That is the question. I would say don't buy at this level. Well, at least I'm not going to buy at this level. I would like to get a pullback. I would like to get a pullback maybe at, I don't know, maybe like at 0.70919. That's a good level. So yeah, I'm gonna have to get a better price. Yes, I do wish I kept on holding this position. It probably was, I would say it was a mistake closing it because the conditions of why I took the trade were not fulfilled. I was betting on a CPI print that was lower than the forecast. That didn't happen. So the conditions were not met. And that's why I closed it for break even. But it would have been a pretty good entry. Would have been a pretty good entry for this trade. I'm not going to lie. That's how it is. Yeah, that's what I have for the Aussie dollar. And that's basically my main watch list at the moment. Like opening for this week, Swiss yen still holding, Aussie dollar. I would like to get in on a buy position, and gold. I would like to get a bit of a pullback and then a buy position as well. We need to take a look at the Fed Watch tool. So what is the market saying as far as rate hikes go? Let's take a look. Yeah, this has completely shifted. At one point, this was 50-50. Now the market basically knows that the Fed is not going to hike rates on the September meeting. So we have a 69.2% chance of a hold. by the end of this year, the market is still saying we get one rate hike. Now that's an opportunity right there, because personally, I believe we won't get a rate hike. I think that is highly over exaggerated. That is mispriced. So there's an edge to get in and short US dollar. When would be the right time? We will see in the future. But I think, so if you don't know how to read this, I'll briefly explain. Current rate is here, 350, 375. Then you have the probability of no hikes, one hike, two rate hikes, three rate hikes by the end of 2026. This is the last meeting. This is the 9th of December, 2026. I would say this is mispriced. And here is what I think. This should be 95%. This should be 4%. This should be 5%, 1%. This should be 0. That's how I see it. I would say these are not going to happen. So the outcome of that would be that the Fed will be more dovish than the markets expect. Dovish is bearish on the US dollar. So that's why buying the Aussie against the dollar is a good play, in my opinion. If we look at the DXY, and if we ask ourselves, where can this chart go? Bearish, in terms of bearish moves. 98, I think that's a good support level. 98, and by the time it hits 98, and if you're in a buy position on the Aussie dollar, you can make some decent money. You can make some decent percentage. So that's how I see it. 98 should be fine. And that does mean that the DXY stays in this overall, we can call it a channel now. I mean, it's very subjective what you want to draw. You can say it's a channel. You can say it's a flat range with a failed breakout. So it's subjective. It's very subjective. Let's try the weekly. Let's try the monthly. Monthly kind of looks like an expanding range, if I'm being honest. That's the worst possible technical formation you can get. So something like this, worst possible thing, really not bullish, not bearish, just a sign of nothing. This is as far as technicals go. My decision is built on fundamentals, but now I'm commenting on the technicals and saying how the price looks. Okay, let me just go through the comments and let me see if we have any requests that I would personally like to go through, because I know you guys have a bunch of requests, and usually I like to focus on the ones that are interesting to me, as I can't really go through all of them. GPNZD, Canadian CPI. Okay, that is actually interesting. Let us take a look. By the way, the calendar for this week is pretty flat. So like we don't have much. The most important event this week, you can say, is the FOMC meeting minutes, but that's not really that important. You know, for me, the important thing would be the Aussie employment change, because I would like to buy the Aussie dollar. Other than that, we don't have much. So the CAD CPI, year on year, the forecast is for the same number. Let me take a look at the Edge Finder. Let's go to inflation CPI. Let's look at the CAD. $2.8. It's elevated. It's elevated. Yeah, as far as I can see, a bit higher. So the forecast is for a bit higher print. The median also a bit higher than the previous number. The trim the same. Personally, I'm bearish on the Canadian dollar. I think their economy is not doing that well. The inflation is not like out of control. Let me just see the Aussie inflation. So the Aussie inflation, I would say, is a bit more out of control. The United States CPI seems to be more elevated, but Canada, it's not really a massive issue. I would say there's more of an issue of the growth. So the GDP. there were some negative prints. That's a problem. And the latest one from May was 0. That's an issue as well. Their housing market is not doing well. If you go to labor unemployment, you can go to like Google Gemini and ask Gemini or Claude to assemble you a chart for the Canadian housing market. You will see it's going down and down and down and down. That's bearish for the CAD. That's bearish for the Canadian economy. Just not a good situation. So if you go to unemployment, CAD, well, it's starting to improve a little bit. But if you look at the historical data, so we had a big climb up from 5% to now 6.4%. It's not that great, not that great. So if I had to make a decision on the CAD, I would say it's a bearish one. I would say bearish on the CAD. It is, Kevin says, it is hot here in Florida. I can imagine. Yeah. Let me just see and compare what's it like there. So current weather in, can we go Florida, Orlando? Yeah, it's a bit of a heat wave. Yes, this is horrible. But it's similar in Croatia. Good morning, everyone. Will the New York session be bullish? I don't know. We shall see. Aussie NZD, check out GBP CAD, Aussie NZD, AUD NZD. Marathon Sprint, I've not gotten the link. Unfortunately, I can only post links in YouTube, I believe. So look, just Google A1 Trading, Edge Finder, or whatever you're interested, you will find it on the A1 Trading website, right? It's super easy to find. The Discord information is there. The Edge Finder information is there. So do take a look. Oh, this is really cool. You can explore the Edge Finder for free. Huh. It's very nice, actually. Can you get top setups? Ah, okay, so it's a premium feature. Makes sense. But you can, you can test it out here. So Aussie NZD, that's something that is interesting to me as well. So I'm going to go through that. Let's take a look. It's in a descending channel, kind of. I'm personally bullish on this one. I wouldn't buy, so I wouldn't take a position here, but I'm bullish on the Australian dollar as a currency, and for the New Zealand dollar, I am bearish. I think way too many hikes are expected out of the RBNZ. I think with their current economic situation, they cannot really afford to hike rates so aggressively like the market expects them to do. So that's bearish for the New Zealand dollar. I think as we go in the next few weeks to months, the market will start to understand that the RBNZ won't be so aggressive with hikes, and the market will start to sell the New Zealand dollar. So that would be my game plan. I would be long on Aussie NZD. Personally, I don't think there's a massive edge in doing that at the moment. I would much rather play something with the dollar and the Aussie. So the Aussie dollar, GU seems to be catching a bit as well. So GU seems to be looking bullish. So yeah, Aussie NZD, not my favorite thing in the world. VIX is pretty flat, calmness before the storm. Yes, look, it's August. The volatility for Forex is low. The VIX for the S&P is low. Most of the big players, big investors are on vacation. Most of the people working at the big banks are on vacation. So you need to wait for, I would say, beginning of September. Things could heat up a bit in the Jackson Hole meeting, and that's the last thing I'll mention for today before I pass the show. So Jackson Hole Symposium. It is scheduled for August 27th to August 29th. This year's topic is boring as hell. Makes you fall asleep just by reading it. In the past, the Jackson Hole Symposium was supposed to be, or was, a key turning point in the Fed, in the Fed's forward guidance, in the Fed's thinking. This time, because we know Kevin Warsh doesn't like forward guidance, I think it's going to be a nothing burger. So you'd probably need to wait for the beginning of September for all of the participants to come back to their trading desks. That is it for me. You can catch me again in 2 hours during my second segment. James is coming on in 30 seconds. I'll play a quick transition and then you will see James. Thank you for watching, and I'll see you in a bit.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. How's everyone doing? Hope everyone is well. I'm still on the road, so we're going to have to do the same as last time where I'm reading the chat from the YouTube pop-out. So, did everyone have a good weekend? Also, the audio should be a little bit better today than it was last week. But yeah, still definitely not as good as it normally is. But again, working with what I've got. Christoph, hello, my friend. Hope you're well. So, what do we have going on? Modi, hello. What do we have going on today? Let's take a quick look at the Edge Finder. As I said again last week, because I'm not at my desk, I'm not as with it with the markets this week. So bear with me. I might have to do a lot of, thinking on the go and reanalysis and that type of thing. So on the Edge Finder, we have pound yen, pound dollar, gold, silver, pound Swiss, and pound New Zealand dollar. Euro dollar and Swiss yen also looking quite attractive. So we can take a look at these markets. What else do we have? The US dollar is getting a bearish reading here, actually very bearish with -8. Ethereum's bearish. I don't trade Ethereum, but we could maybe take a look at that later in the stream. Dollar CAD, dollar Swiss, dollar ZAR, and oil as well. Interesting. Okay, so we've got a wide selection. There's a lot of good readings here for us to take a look at today. Chili B, hello. Christoph, New Zealand CAD is New Zealand CAD short hovering near fib level. Okay, let's take a look at that one. Okay, we'll start with New Zealand CAD, and then we'll just make our way through. So, what do you want to go short, though, is a question. Is that the direction? Do we have anything here? I don't think we do. I'm not seeing any readings for New Zealand CAD. So fundamentally, already, I'm going to lean on the neutral side because I just don't have anything to rely on. However, if you wanted to be a short seller, Christoph, you are right. We are at a pretty decent fib level here. The issue is this market has got a little bit of a sort of wedge going on. Now, I always say this, I don't trade trend lines, I don't trade wedges and patterns and things. But when there is a really obvious one, I'll mark it up and see what happens. Now, because I don't trade them, I also don't really know what to expect. But I'm fairly sure in a pattern like this, when we're trending to the upside, but we continuously hit a resistance like what we've got here, I'm fairly sure we actually normally expect to move to the upside. Now, with patterns, they're very much a 50-50 thing. It doesn't really give us much, in my opinion, which is why I don't trade them. So in this case, because there is no fundamental driver, we are seeing buying pressure overall. Again, with these higher lows, we've got the 200 that is above the 50. So again, technical bullish trend here. I wouldn't want to sell into this. So there is just a lack of confluence other than the fact that I can stop stuttering. Other than the fact there's a fib there isn't really anything else here. Unfortunately, Christoph, in my view, of course, you might have something different than I do. USD stock. I'm not sure what that is, Modi. Do you mean that you want to look at the DXY, or do you mean there's a specific US stock you want to look at? New Zealand CAD was bearish on the Edge Finder last week, right? Yeah, it seems to have dropped off, Christoph. So personally, I would avoid that market. So pound dollar, let's take a look there. I did do my watch list over the weekend, but it wasn't very comprehensive. So what do we see? We've broken out of the downtrend that we've been in. So, we were kind of in an uptrend here with the moving averages. We had the higher lows get formed, the higher highs. However, something I was quite vigilant of was this, again, this sort of trend line that we were seeing come into play. We have broken above that now and we've created a new high relative to the previous high, almost breaking out of this level of resistance as well, which is quite nice. So realistically, the only thing that I need to see now is some sort of pullback. So I think there are two potentials really in my view here. Either we get this kind of pattern that I've got drawn up where we, create the high here, double top potentially, pull back towards the trend line into the 50% retracement and then reject and continue higher. Or we have option 2, which is actually where we just continue higher from here, then come back down, retest this level, and then continue higher from there. Either one, I think, would be fine. I'm not really bothered which one. It's just a case of waiting, really. So the Edgefinder's bullish reading on pound dollar has been very persistent, actually. I think it's been there for the past 2 weeks. So the longer the score, or the longer a score is on the Edgefinder for, maintaining kind of where it is, give or take a point here or here and there, generally it's a pretty good signal. Again, the fundamentals are there, they're following through, it's consistent, it's normally quite a strong one, which is what we're seeing with pound dollar. So gold, I think gold's quite simple actually at the minute. I don't think there's really anything new going on. I've still got my positions on gold at 4,000, so these are still active, but I've added a fresh chart just for the swing trade idea here. So this one's a little bit frustrating because we're just not really seeing a meaningful pullback. Last week, I think we had the fib here and then we moved it here and now I've had to move it again here. We're just not really seeing any decisive move lower other than this small retracement that we had, which obviously wasn't enough for me to do anything with. So the point still stands really, fib from the low to the high. I'm just waiting for a retest in towards this 61.8 level that lines up with the previous structure on the left. And that would just provide, the break, retest, and continuation pattern. So I think it's, again, a very, very straightforward idea, but it's just a case of actually trying to get into it and waiting for that pullback is a little bit of a challenge, to be perfectly honest with you. Okay. Typo James, no problem. Luna, good to see you, my friend. Hope you're well. I'm short dollar Swiss after it rejected the fib last Friday. Okay, let's have a look at that. Just bear with me. It's still quite hot in the UK. It's not as bad as it was last week, thank God. Okay, dollar Swiss. Yeah, we were having temperatures in London anyway of like 28, 29 into the 30, I think it was like 33, 34 last week, which to some Americans might not sound like much, but in the UK it's horrible because we've just not got the infrastructure to deal with heat. Like, there's no AC or anything. It's hell. Anyway, this is crude oil, not dollar Swiss. My bad. Okay, there we go. Dollar Swiss. So what did you say? You were long dollar Swiss. Oh, short dollar Swiss after it rejected the fib. Okay. Yeah, I know we were looking at this one. Was it last week or the week before? And I kind of scrapped the idea because I didn't really like it. What do we have? I would say this is a lot stronger than what we were looking at down here. So I don't mind this setup as much, actually. I would say technically it looks good. The only thing that I am not really happy with is this 200 moving average. We can see it's being used as dynamic support here. Every time we've broken below, we've just been bought right back up, over here as well and here. And it seems like maybe again here. So I would be very vigilant of how we react. And if we continue higher from this point, it might be a case of just trailing stops quite aggressively. And then obviously we do get this break lower, then great, you've got a bit more of a confirmation. But yeah, I'm not sure I would be willing to go short just yet. It's a bit too aggressive. Again, I'm a trend trader. The trend is bullish, technically speaking, for me here. But we do have, as you said, dollar Swiss is bearish. So fundamentally, shorts are completely backed up. And I would say, actually, there's quite a lot of room on the left here for this market to continue lower. So hypothetically, if you were short from this level with stop loss at the fib high, I would say I would be targeting at least, let's say what level is that? 0.782. So that would line up pretty decently with the previous lows on here on the H4. Let me just see. Yeah, I would say this is actually a really good level to be a seller, actually. We've got a pretty nice level of resistance through here. I'll be honest, Christoph, I really like this. But again, it's just the 200 moving average, just a little bit off-putting for me right now. But again, you might be ahead of me on that one. So if you're short and then we do get the moving averages cross, this week, for example, you'll be already in a great position. I will obviously have a bit of a worse entry, but that's just the criteria that I have to follow. Okay, so also, by the way, what I said last week was because I'm using the YouTube pop-out chat, and obviously there's a stream delay anyway. I might get back to you. Yeah, I don't know how long the delay is. It might be 30 seconds or a minute or two. But bear with me. Again, I won't be ignoring you. I'm trying to keep up with the chat, but again, there might be a bit of a delay. Okay. So what do we have? So we've done gold, we've done pound dollar, pound yen. I don't really have anything to talk about because it's kind of the same as what we have been discussing over the past 2 weeks. Or in fact, I think 3 weeks now at this point. Where is it? Here. Yeah. So my whole idea when it comes to yen pairs is still exactly the same as it was. We've had no regime change. There's nothing. There is no reason to do anything other than look to be a buyer. In my personal opinion, I think that opportunity is now gone. I think if you were going to be a buyer, it really should have been down here towards this 200 daily moving average after the intervention. And that's just because that's the best place to buy it low, essentially, relative to where it was. And another reason I wouldn't really want to be a buyer at this point is just in case dollar yen gets back to 164, which was the previous intervention level, and they intervene again, and you bought here and you actually take a loss on what is fundamentally still a very good trade. So I would be quite aware of that if you are looking to be a trader of yen pairs. So for example, dollar yen, I would say is still a reasonable buy because we do still have quite a large potential move back to the upside here towards 164. Again, the previous intervention level. So in this case, I actually might add another position in here. So I've already got one down here and another one here. So around 156 to 158. I wouldn't mind adding one more in around 159 and then leaving the position to let it run and continue higher. So as I was saying, there's no regime change. We did have the intervention by the MOF and the Fed, but there was no policy change. So it's still a great carry trade. It's a good opportunity for traders and investors to continue with that carry trade dynamic and get paid to just continue on the long side. And again, we do have the fundamentals to back it up. So even though the US dollar is still quite weak, again, it's getting this very bearish reading of -8. I would still say dollar yen is a good buy. So even if dollar yen does end up moving a little bit lower, I'd be more than happy just to add a bit more of a position size in. How to copy my trade? You can't copy my trades. I don't do trade copying. I do have a Discord, but I'll be honest, from that question alone, I would say it's not for you. The market is waiting on a ceasefire deadline today. That's true, Christoph. Actually, you are right. I've not been keeping up that well with the markets and headlines and things, but yeah, we'll see what happens. I wouldn't be too hopeful or optimistic, to be perfectly honest. I'm looking at GBP CAD. Interested to see CAD CPI later. GBP CAD. Yeah, actually, to be honest, we were in this. It might have been stopped out. No, it's not. We're still holding on, actually, surprisingly. Yeah, we'll see. I'm not sure what the expectation or the forecast is of that news, actually. View on euro dollar. Okay. So not looking good for my short position, which is okay. I'm still in, still alive somehow. However, let's go to a fresh chart so we can have a bit of a fresh view here. There we go. So with euro dollar, what I would be looking for is actually to go long. So I'm already in the short position. I've still got that active. Actually, I should have cut the position by now in hindsight, but again, I've been a bit detached from the markets. But anyway, euro dollar, as we said, is getting a bullish reading on the edge finder here of +8. So very bullish, which is nice. So what we can see, we've broken above our daily 200 moving average. We are technically still in this downtrend on the daily, but it looks like we might be coming into a little bit of a moving average cross here at some point. So fib from the daily low to the daily high, I'd be looking for a retest into sort of the middle of this fib zone. So about 50% retracement of the 50% retracement, if that makes sense. And that would allow price to retest the previous resistance on this daily time frame and then continue higher. So again, that break and retest idea. So the downside here is this, again, is the daily time frame. So it's going to be a little bit of a wait. So patience is absolutely key in this case, as far as I'm concerned. So yeah, that's kind of all I've got for euro dollar. It's a very, very simple one. Again, we're just waiting really for the daily trend to change, pull back on the daily time frame. The H4 has already flipped to a bullish trend here. We've got previous structure on the left. The edge finder is bullish. So yeah, super basic. Okay, so what else do we have going on? Silver could also be a really good buy. I do like to trade silver over gold. It's just a little bit more volatile, and it can move just a lot more, especially on a percentage basis. So I'm just thinking here, it looks very, very similar to gold, actually. I think I like this setup a little bit more just because this fib zone here, the 50% and the 61.8% line up really well with the previous structure on the left. Not perfectly, but a lot better than they do on gold. So again, fib from the low to the high, looking for this pullback into the fib zone, and then this continuation higher. So very similar setup to gold. It's almost 1-for-1 or 1-to-1. But yeah, I think if we can get this, I think I would be happy to load up on a bit more silver than I currently have on gold and just increase my metal exposure by another maybe 2% or so. Just add a bit more size onto that. Stop smacking my lips when I'm talking. No. How about you click off the stream? I don't know who you are, and you're sat watching me. Do not give me demands on what I do, don't do, and how I talk. So view on euro dollar is what we just covered. I'm open to pound yen long, 2.5% profits. Would you take profit before GBP jobs data tomorrow? No. So if you're already long and you're already in 2.5% profit, I would actually just be trailing the stop. I don't see a reason to close the trade. Even if, what are we saying? Even if the jobs data isn't favorable, I would still say it's a good buy. You know, again, the whole thing with the yen pairs is driven basically just by the policy or the yield spread, obviously, between the BOJ and the Bank of England or the Fed or the ECB, whichever market you're trading. So yeah, very, very simple. Also, about the lip smacking thing, there is a slight thing there with, obviously, again, I'm traveling, so I'm using my MacBook mic, which is really sensitive. So it's probably a bit louder than it normally is. So I do kind of apologize, but it's just the way I talk. So sadly, not much I can do about it. Why is the edge finder showing bullish on euro dollar? Let's see. Okay, so technical signals bullish with a +3, institutional activity -2, sentiment. So mixed sentiment, so institutions, so COT data, net positioning is neutral, week-on-week change is bearish. This is the only real negative factor for euro dollar. What's driving the score primarily is the seasonality. We've got the H4 and the daily chart trend. I'm not 100% sure how the trend is actually defined on the edge finder, but that is getting a positive score. Retail traders are largely short, so we obviously get the contrarian reading for bullish because we like to counter trade them. Economic growth is +2, so we've got GDP versus forecast is much more in favor of the euro over the dollar or the US dollar. I think the GDP for the US was 1.5 from the, I think forecast was like 2.3 or something. So it's quite a large miss on the GDP for the US on the previous release. ISM manufacturing PMIs are bearish, so more in favor of the dollar. We've got ISM services PMI, which is bullish. Consumer confidence, bullish. Jobs market and inflation also bullish here. I'm not going to read out every single one. That'll take a while. But hopefully you get the point. So we've got the three pillars, which is what I consider the sort of three main components for the Federal Reserve or any central bank, which is inflation, labor, and growth. So they're all in a bullish side for Eurodollar. Again, retail traders are majority short, so counter trade them. We look to go long, and then we also have the technicals here. So yeah, super simple. Ray Beast, hello, how are you doing? Do you have any thoughts on the French and Australian index? Does the edge finder feature them? Interesting question. No, I don't. I don't trade them either. And I don't think the Edge Finder does have them. There's a very quick way to tell, though. We'll go to the asset scorecard. I think the French one is the CAC. Is it CAC 40? Doesn't seem to, no. And then Aussie, what's the AU? Something 2000, AUX 2000 or something, Aussie 2000. But no, I don't think so. But I'm sure they'll probably add it. They're constantly adding new markets. Like recently, they added Nat Gas, which was a really cool addition. These prop firm not letting my model swing trade, even though they allowed before. Yeah, so I got a message from someone. I think it was a stream on Friday or something. I said that FTMO stopped their swing accounts. I got corrected on that very quickly. They didn't stop swing accounts, but they reduced the size. So I think they did 200K. I reduced it down to 100K. But the idea is still the same. I think the reason prop firms cater massively towards scalpers and day traders is because they're just the most difficult strategies. It doesn't matter what's individual strategy, but they are the most difficult sort of timeframes to trade. So they will get a lot more losing traders by only or mainly catering to those timeframes. Whereas swing traders, I really do think you have a bit more of not necessarily an edge, but I think you have a lot more potential to be profitable as a swing trader because it is overall just a lot easier, I would say. Again, we've already had that conversation, so I won't go into it, but happy to expand if anyone wants. James, Euro New Zealand looks good for buys going into September. RBNZ probably won't hike, but ECB hike probability is high. Euro New Zealand. So yes, the ECB I think is currently at around a 90% probability of a hike in the next meeting. RBNZ I think is 50-50. I'm not 100% sure. It's very difficult to get the probabilities for the RBNZ. So yeah, I don't think you'll ever have, you know, with the Fed expectations, the ECB expectations, normally you can get within, you know, a certain range of every single type of, you know, way that people read it. People have different models to forecast their expectations, but the RBNZ is quite tricky. Same as the Swiss National Bank. But anyway, yeah, back to your point. It's, yeah, probable. I'm not 100% sure on the RBNZ. I'm not exactly sure what I would want to expect there or what I would expect anyway. Technically speaking, though, I mean, to be honest, this looks like we would want to go short, and that's more just on a sort of mean reversion idea, just because we've had such a large run to the upside. And typically, this market actually looks quite range bound, really. I mean, we do have these moves to the upside, slight moves to the downside. Yeah, I think based on sort of the recent behavior since sort of 2012, this sort of mean reversion idea where we have these large runs to the upside over, well, a couple of weeks, and then we very quickly revert back to the downside. Basically trying to follow that same idea, I wouldn't think is a bad approach. But again, we would need to see some sort of confirmation for that, whether it be central banks, data, whatever, you know, whatever you look at. On the daily, what we do see is a slight moving average across here. So technically in a bullish trend here, maintained that bullish trend throughout here. And we finally had the cross with lower highs. So again, technically not awful, I would say, but definitely not something I'd be interested in right now. I think it needs, again, a bit more technical development. I want to see these lows get broken. So break the lows, retest into the structure, and then a continuation lower, as well as some sort of edge finder reading, which I'm not sure if we've already got yet or not. I don't know. Let's just see. No, there's no Euro New Zealand reading here. So yeah. Oh, actually, hold on. What about short side? No. So yeah, I would need to see Euro New Zealand flip bearish on the edge finder. And I'd need to see, again, the break of those lows. Euro Australian sell-off. I don't know. Let's see. Although from what I understand, the euro and the Australian dollar are relatively strong at the moment. However, yeah, actually, it doesn't look like it, does it? I know we obviously did have the large move to the downside earlier in the year, but we've not really had any type of recovery since then. So I think really the key thing would also in this market be, again, a break of these lows. I wouldn't want to be selling straight into this level of support, but I also wouldn't really want to be a buyer. I think the Australian dollar is doing quite well at the moment. So in this case, again, if you wanted to be a short seller, break of the lows, retest into this level, and then continuation lower. I don't really see another way to approach this because, again, I wouldn't want to sell into this. I just think it's a little bit of a death sentence. It could, of course, break, but I don't want to risk the potential bounce off and then sell again, then potential bounce, and it just ends up in the range bound, bouncing off support. Did you enter the FTSE? No, I didn't actually, Christoph. I was looking at the FTSE on, I think we looked at it on the Friday stream, didn't we? I'm fairly sure. The problem with the FTSE was that it fell off the edge finder. The setup looked really good actually on the, I think it was the daily time frame here. Let me try and remark it. I can't remember exactly how we had it. I think it was this. So we were looking at the daily highs here on the 50% retracement. I think it was something like this. It might not have been exactly, but you get what I'm saying. So yeah, the entry was actually quite good at one point. Again, wherever it was at the time. So yes, I was looking to get in on Friday. And I was like, oh, maybe one for after the stream. But then the problem is it's fallen off the edge finder. So the FTSE at one point was the highest reading. I think it was very bullish. I think it had to score 15 or something crazy. And then over the past 1.5 weeks, it just continued to drop and drop in score until now, where it's just completely gone. So, you know, as a fundamental trader, if there's no fundamentals, there's nothing I can do, unfortunately. So it's just the way of the wind. Thoughts on pound New Zealand? I think we just looked at pound New Zealand like 5 minutes ago. My camera's off. Has it gone? Oh, my camera has gone. Bear with me. Let me reconnect. There we go. Thank you. Also, I realized my head's really low. Do I have to keep this open? Weird. Sorry, guys. Bear with me. Right. That should be better. Okay. So US oil. My friend, you don't need to spam. You don't need to spam it. I'm happy to look at it with just one message. When you spam something, actually makes me not want to look at it, but we will. So oil here, not very bearish, but we're getting a bearish reading of -6. So based on that, I would be more interested in going into short positions. However, the thing is with oil is the fundamentals can do one thing, but the geopolitical landscape really is an what's the word? I don't know what the right word is. It kind of overrides it. That's what I was trying to think of. So if we have, I don't know, let's say really bearish fundamentals for oil, but then we get a headline like, for example, the Strait of Hormuz is going to stay closed until December, that is going to override the fundamentals and oil will continue higher. Of course, that's hypothetically. I would imagine that is what would happen. So that's the tricky part. Is I am not optimistic that the Strait and the Iran situation is over. I think it's actually likely to continue much longer than what people are expecting, and that's just my opinion. It could not happen. So based on that, I personally wouldn't want to go short on oil. However, with the edge finders bearish reading, if we take away the geopolitical idea and just look at it very simply, there is maybe an idea of actually going short here, because we've got the fit from the high to the low. We're coming into a 50% retracement. We've got the bearish edge finder reading. So maybe something like this would be worth an attempt. Now, the other problem here is the risk to reward ratio. So if you were looking at something like this, you'd be on basically just a 1-to-1. Now, you would really, if you wanted it like a 1-to-2 or plus, you would kind of need oil to come back down to around 55, 56. I don't know if that would happen. Again, I'm basing that more on the fact of I'm not very optimistic on the Strait of Hormuz situation. So I personally don't want to be involved. I'm happy to just sit from the sidelines and watch whatever oil does. But that is my current opinion. Okay. So we've got about half an hour left. Let's see, actually, what I've not done yet is look at the COT data from last week. Hold on. What do we have then? So S&P has seen some inflows, which is quite nice. The Nikkei saw outflows and Nasdaq also saw outflows, which is interesting. The Nasdaq is getting a bearish reading. I'm not sure if the COT data actually was the catalyst for it to flip bearish. Let's see. Hold on, I need to wait for this header to go away. Nasdaq here is -4. So what's going on here? So crowd sentiment is largely bullish, actually. So we're getting a contrarian bearish reading. Technicals bullish. Institutional position is bearish, as we just looked at. Interestingly enough, actually, net positioning is also bearish, not just the week-on-week change. Economic growth is bearish. Inflation's bullish. Jobs market's very bearish. Interesting. So, could we sell the Nasdaq is the question. I don't think we could. So what I was looking at yesterday on my watch list video was basically this. So I obviously wouldn't want to buy it because, first of all, we're heading into a resistance. We've also got the edge finder that's bearish. So I'm not looking to be a buyer at this point. But for me to be a seller, I would need to see a rejection of these highs, of the resistance, a new low get formed somewhere, and then another sort of 50%, a 50% to 61.8% retracement, and then, this continuation lower. It wouldn't surprise me if we do end up coming to correct this left side. I think that's still a very high possibility. But of course, whether that will happen or not, I don't know. So this is kind of all I've got for the Nasdaq. I really don't see anything of interest at this time. Again, I'd need to see the break lower, pull back, and then maybe I could get short. So it's a little bit of a tricky one at the moment. So I'm just going to stay away for the time being. The Nikkei did see outflows, but it's just not really, it's not something I want to be involved with at the moment. Again, it's basically the same reason as the Nasdaq. I also don't think the Nikkei is on the edge finder at the moment as a bearish reading. I think that's kind of it. There's not much of interest here. It's just the S&P, the Nikkei, and the Nasdaq, really. So let's take a quick look at the S&P. See what's going on there. Where are we at? Where's the S&P? Down here. Yeah, so I think actually what we could maybe do, let's get rid of this. What I could maybe do here is short the Nasdaq at some point, but then go long on the S&P. That sounds a little bit counterintuitive, but it would first of all hedge off the risk from going short, because shorting things like the Nasdaq is very renowned to be difficult, and it is very difficult. So that way, if the Nasdaq, ends up completely reversing and doesn't end up following through to the short side, at least then I'm in the S&P to the long side to hedge off some of that risk. So that could be an idea. So to be long on the S&P, we've obviously got the fib from the low to the high. We've broken out this range, created new highs, which is nice. So now it's really just a case of waiting for a pullback somewhere. And then again, that continuation higher. So I think this is base case at the moment for the S&P, in my opinion. But again, I just need to sort of wait and see what happens. How to copy all your trade capture. My friend, I answered that question earlier. You can't copy my trades. James, do prop firms put your orders in live market? No. Right. After they see you're profitable. No, I don't think so. So I think the best you can do with a prop firm is basically get a book. So your orders aren't actually going into the market, but they may copy your trades into live markets. So it's not a case of you click buy and it's gone straight into the actual market flow. You click buy, it's a demo account, so it's just on basically just a UI thing, essentially speaking. And then the prop firm may essentially, as soon as you click buy, they'll also click buy, same stop, same target, and their order might actually be placed properly, if that makes sense. But no, I'm fairly sure the only way you can get real orders into or through a prop firm is if you're with an actual prop firm, not an online digital one, like a real sort of trading floor prop firm. I could be a bit mistaken. I'm not overly educated on prop firms, but that's just what from my experience and what I understand. Can you go over pound New Zealand again? Yeah, we can have a look at that shortly. Just bear with me. I speculated and did really well on silver miner called Honey Badger. I've heard of Honey Badger, I think. Silver before the latest reversal. Very good. I'm glad you made some money on it. You've asked again how to copy the trades. Brother, I don't do that. So our max drawdown is 2% while the S&P had near 8%. Fantastic. Really good. I also got a few, reject a few payouts before. Yeah, that's unfortunate. James, I heard you mention trade Darwin in a stream a couple of weeks ago. I don't know anything about it. Could you please explain? Yeah, so Darwin is, how do I explain Darwin? It's kind of like a prop firm, but not in a way. So you're not trading a real account. So you get given a 100K demo account, essentially. you have a 15-day like probation period where you've got to just trade. It's not really doing anything, just calibrating, seeing what your risk is, what markets you trade, basically just capturing the metrics of your strategy. After that 15 days, you go, I think, into silver. So you've got two categories. You've got Darwin Silver, Darwin Gold. In silver, you can get like allocations. I think it's like 30,000 on average, 35,000 and slightly higher. And once you start getting allocations, you can start getting payouts every quarter. You can also pay for it to be every month, but I don't really see the value in that. And you basically just build a long-term track record with a reasonably well-valued company, because what you can do with Darwin, which I think is like the main selling point, is once you have like 12 months or 18 months with them, and obviously you've got a good strategy that's actually doing well, you can essentially use them as an umbrella. So obviously, you and I, we can't go out on the street and advertise a hedge fund or whatever it may be, because I'm going to assume you're not licensed, and I'm not either. I legally can't do that. So you can use Darwin as basically a proxy. I don't think you can still go and like, invest with James, get 10% returns every year, for example. You can't do that still, but you can use them as a way to get investors' capital. I'm not sure exactly what the fine print is, but that's it in a nutshell. So it's really good if you don't have loads of money, or whatever. I think it's a good opportunity, to be honest with you, even if you are trading decent personal capital, because again, I don't think there's really a thing of too much money. But the other thing is with Darwin, it's not like a prop firm where you go full margin, you pass phase one and get a payout or whatever it may be. It's much more of a long-term thing. There is no phase one and phase two. It's a case of you just trade the account however you trade, and over time you build up that history. What is gold doing now? I don't know. Check TradingView. No, I'm joking. We'll take a look at gold in a second. Am I bullish? I'm still bullish on Aussie New Zealand. Yes, I am still bullish on Aussie New Zealand. Okay, so what we said we'd take a look at. Okay, Pound New Zealand. I'm going to say Pound New Zealand to the end. As again, we did already cover it, so I'm not going to do it again right now, but we'll do it before the end of the stream. So we'll do gold, and then we'll have a look at Aussie New Zealand. We did also look at gold, but this one's only quick. So gold really doesn't have anything going on. The pullbacks we're seeing are too minor. So like this one, for example, I can't do anything there. It's not what I consider a meaningful pullback of about 50%. So this was just a bag of nothing. So really what I need to do is wait for a pullback towards the 61.8% retracement, lines up with previous highs, and then I can look to go long and continue this market higher. The edge find is bullish on gold, so I don't really see anything that is a huge risk other than the Middle East situation. But yeah, as things stand right now, I think it's pretty straightforward. What else did we just say? God, I've got a really bad memory. Aussie New Zealand, that was it. Yeah, okay. Yeah, I do actually really like this. This may be an entry. So whoever pointed that out, thank you. So fib from the low to the high. We've come into the fib. Really nice rejection off our fib zone. Lines up with previous structure on the left here. Not by a huge amount. Actually, hold on. Yeah, not perfectly, but we do have the low over here that was obviously respected as support. We've got highs here, resistance. So yeah, this retracement I think is actually quite a strong one to potentially be a buyer. So sorry, I've got a really itchy nose. So how would we execute this? So I wouldn't actually mind going in at market execute or at market price. Now, the big issue here, and what is making me a little bit hesitant, is just this weekly level. So what we've been looking at is this kind of zone here on the weekly. So, so obviously we can see it was used as support over here, and then now it's been used as resistance. So very long-term break over here, and then a retest all the way over here, many, many years later. So the question really is, do you expect this market to break above this weekly level of resistance? I wouldn't say it's impossible, but I would say it might be quite difficult. Just because I don't think there's really any new catalyst to warrant a massive amount of buying of this market again. It's not the same dynamic that we had over here when we had the RBA that was hiking. We had the RBNZ, I think at the time was dovish. We just don't have that landscape at this moment. So I'm not expecting a massive run higher, but I do think we are likely to catch a bid back into this level of resistance around, I would say at least 1.22. So in that case, there might be room for like a 1-to-1, a 1-to-1.5, maybe a 1-to-2, depending on exactly where you target. So yes, I think Aussie New Zealand is a good call, but again, there are obviously caveats there. Hello, James. How's vacation going? It's good. It's not really a vacation. It's more just a bit of traveling, just to get out of my office. Still working, but yeah, it's good. Thank you. What happened to my tool? It's completely messed up the free portion. I've got no idea what you're talking about there. Well, timing is pretty hard. It's not impossible. Oh, right. It's not to me. Okay. The bank stock to high yield credit spread ratio is still quite healthy. So my conclusion is volatile blow off top until at least next year, especially after midterm tailwinds. That's actually, Wilson, I like it. I think that's a very good hypothesis. Yeah, I wouldn't disagree with that at all, actually. Modi, you entered what this morning? Oh, Aussie New Zealand. Very good. Nice catch. Also, bank stocks performing good. Yeah, I've seen stocks do seem to be performing quite well, actually. I know we had the bit of a Google meltdown at one point. I think there was like negative cash flow or something. I know that was a big red flag, but it seems to have just been a one-time thing. I've not really seen a big issue. Swiss yen got an edge finder score +5 jump. What, +5 in one day? Let's see. Oh, wow. Yeah, you're right. I wonder what's happened there to drive it 5 points. I don't know. Let's have a quick look at the breakdown here. Was it Swiss yen? I think it was Swiss yen, wasn't it? Or was it CAD yen? Yeah, Swiss yen. Am I blind? Oh, it's here. Okay, my bad. So it's got a score of 8. Technical sentiment's bullish, fine. Yeah, it's not my favorite, just because, again, the 3 pillars, we've only got one that's bullish. It is given a score of 6, so it's good. However, not great. And the big but here is that, again, nothing really has changed, although obviously the S&B actually has a lower interest rate than the BOJ at the moment. So, yeah, interesting. I'll be honest, I don't really see this being that attractive. Yeah, I think if you were looking to get into the yen pairs, there's just better. You've got euro yen, pound yen, dollar yen, CAD yen. Swiss yen just doesn't seem like the best option. I mean, I'm sure it would still be a good buy. I mean, look at this uptrend we're in. I'm not saying it's a bad trade or it's going to turn around and flip bearish. It just doesn't seem like the best opportunity. It's more of an opportunity cost way up here rather than is the trade good or bad. I'd still say it's good. But again, I think opportunities in other markets are slightly better. So waiting with cash to buy fire. So that's exactly what I'm doing. Yeah, I think at the moment I've got, I think about 70% of my long-term portfolio actually just sat in cash, which to be fair has not been the best call over the past 1 to 2 weeks. But, if and when we do get the larger melt to the downside, I'm sure I'll be grateful. King of Kings, good morning to you as well. Still enough room to run, show momentum and euphoria. Yeah, I do agree. I think it's similar. I mean, this might be very presumptuous, but I think it's very similar to sort of the 2007 period where people can feel it. It's very obvious we're in a bit of a bubble. I don't think anyone really denies that. I think it's quite an open thing that we are in a bit of an AI bubble and tech bubble at the moment. But it's not there yet in terms of, it's not like we're going to pop tomorrow. I think it's a case of, okay, we're all fully aware of the situation. And yes, we all see the risks, but what can we do about it other than just go with the market? At the moment, I don't think there's anything. So it's really a case of staying cautious, but still trading as we normally would with the awareness of the, increasing risk week by week and month by month. And that, again, that's my opinion. I'm not a stock guy, so take that with a grain of salt. Can you do Ethereum? Yeah, we can have a look at Ethereum. what else am I doing? I'm not sure if you're talking to me or Wilson Rabies, but I'll be honest, there's not much I'm looking at the moment. I'm just not that bothered about being on the charts at the moment. So, Aussie, New Zealand's one I'm paying attention to. I'm looking at gold as well, silver, but other than that, not too much really. What market did we say we were going to look at? Oh, Ethereum. So I think we had a bit of a rant about Ethereum. Was it Friday? I think it was Friday last week. I shouldn't say we. I had a bit of a rant. So the situation that I see right here is you've got a digital quote unquote asset that delivers no inherent value. There is no reason to have Ethereum as far as I'm concerned. The fundamentals are bearish, as we can see on the Edge Finder. So hold on. Here, so you can see we've got a very bearish score here of -7. So fundamentally weak. You can see we've very clearly got weak price action here. There is just nothing that makes me interested at all to be a buyer. Now, I don't trade crypto, so I'm also not going to sell it because I don't know enough about it to warrant being involved. But yeah, as far as I'm concerned, there is just nothing here. As I said on Friday, to keep it really simplified and short and sweet, I've never once found myself in a position where I need Bitcoin or Ethereum or any crypto. Everything I do is with cash. Or, when I say cash, I don't mean physical cash. I mean bank card, PayPal, Stripe, whatever else it may be. Never once has it been crypto. The only time, actually, I've ever felt like I might need crypto was when an Egyptian guy messaged me, said, "Can I pay in crypto?" I said, "Yes, you can pay in crypto." He said, "Oh, I don't have enough for the gas fees. Can you send me $10 and I'll send you the full amount?" I was like, well, that's obviously a scam. That is the only time ever. So no, I don't think, even if it was bullish on the Edge Finder, I don't think I would care in the slightest. If a trade has positive carry in a certain direction and it maintains that direction, will price go in the positive carry trade direction in the long term? Positive carry trade in a certain direction. I'm not 100% sure what you mean by that. So yeah, if a market has positive carry, it doesn't inherently mean that the market will go that way. So a good example of that, we've obviously got dollar yen, where the carry trade is very prevalent. And yes, that has been the main driver for it to continue higher. However, if we go to the macro scanners and we look at the carry trade scanner, what we can see is, where is it? Hold on, I'll just search it. I think I'm going a bit blind in my old age. Here, pound Swiss. So the interest rate of the Bank of England is 3.75. The interest rate of the Swiss National Bank is 0. So we get a really nice carry. So buyers get paid to hold. Very simple. Same dynamic as dollar yen in theory with the carry. However, if we look at pound Swiss, short term, yes, been doing very well. But then we look at the weekly time frame. And by the way, this isn't new. This whole dynamic of the Swiss having lower interest rates in the Bank of England, it's not a brand new thing. So you can see that this market has been coming down, even though we've got positive carry. So it's a good thing to pay attention to, but it's not a main driver in most markets. You can get euro dollar is another good example. Euro dollar short positions get paid. So you get paid to just sell euro. Oh, that's not the right market. Yeah, so you get paid to just short euro dollar, but it doesn't mean that euro dollar always is bearish and always moving lower. Of course, here actually on the weekly, it does look like that, but on the daily time frame, you can see it's not quite the case, especially sort of intraday or on a weekly basis, if you will. So I think I understand what your question was, and hopefully that answered it. But yeah, carry isn't the only thing to watch, but it is a big. It is a useful thing, especially when you start trading larger amounts of money. So, if you're trading, for example, a $1 million, $2, $5, $10 million, whatever, in large money, then swaps become quite relevant. If you're paying, I don't know, let's say $2,000 in swap, even though you're on $1 million account, that $2,000 is still $2,000. So you do need to pay attention to it. Obviously, if you're trading a $500 account, you're paying 20 cents, 20 pence in swaps. It's not a huge deal. CAD pairs, what about them? The best play in this late cycle are base metals, more asymmetric trade. Wilson, I like the way you think. I would also agree with that. Okay, sweet. So what do we have? We've got about 10 minutes left. I did say I'd do pound New Zealand again. So if the person that requested that is still here, I hope they are, because otherwise I'm just repeating myself for no reason. Okay, so sorry, not pound Swiss, pound New Zealand. We do have we did at least. Do we still have it? Yeah, pound New Zealand, very bullish here with a score of 9. So fundamentally, fantastic. Looks great. Now, entry-wise, it looks very simple here. So we've got the level within our fib zone, which lines up kind of with, we've got previous support over here, then turned a little bit of support here, minor resistance. It's not perfect, but the markets are never perfect. So we've got the base sort of entry idea here. Now, I wouldn't mind maybe looking for an entry around the market price or towards the 61.8 fib level. The issue I've got, though, and it's making me a little bit hesitant, is just sort of the lower high we formed here. So, we did actually already have this entry. So we had the break, we've had this retest into the fib zone, and we did have this attempt to continue higher, which obviously has failed. We've actually formed a lower high here, and now we're coming lower. So the technical overall idea is there, but it's just more the micro analysis on the, again, this lower high and sort of the candle development. I don't really like it that much. But again, the fundamentals are there. So I'm still watching it to potentially be a buyer, but I just don't know if now is like the right time. So I think what I would have to do here is actually just wait for some sort of bullish confirmation, whether it's a bullish candle close on the daily or something, just some sort of technical confirmation to signal that buyers are actually stepping back in with, again, those bullish fundamentals. That's what you meant. Good stuff. I'm glad I answered your question then. DXY slowly. I'm also not sure what you mean by that one. I think there might be mispriced corporate bonds in certain sectors. Yeah, I mean, I don't touch corporate bonds, so I wouldn't know. Ball out, my friend. Hope you're well. Hope you had a good weekend. Thoughts on euro dollar? You know what I need to do on these streams? I need to do a 10-minute segment where I cover euro dollar, gold, and like 2 other markets, and just replay that 10 minutes for the next 50 minutes of my segments. Okay. So euro dollar, my short position is actually really not looking good at this moment. So with that said, I actually do lean more to the bullish side at the moment. I should have cut this position. However, again, as I keep saying, I have been away. So that's not the one. Hold on. So if we look at a fresh market without my current position on it, this is how I would look to approach right now. So fib from the low to the high, looking for a pullback into this fib zone around the 50% to 61.8%, lines up with previous structure on the left, and then this continuation higher. So very typical break, retest into the fib and continuation type of pattern here. The daily still in this downtrend, which is a little bit of a issue. I'm not very happy about that, but we'll see. We'll get onto that in a second. The H4 here has flipped bullish, so that's great. So normally when we get an H4 trend flip, we typically will see the daily follow soon. Not always, of course, but it can be a little bit of an early sign that we might be seeing the daily trend change. And then we've also got the edge finder here that's very bullish with a score of 8. So I would say euro dollar is a great long position to take. But it's more just a case now of having some patience and waiting for the pullback, because I'm not going to buy it right where it is here. I just think that would be a little bit of an impulsive entry rather than a calculated one. So euro dollar 1.16, nothing to do. Yeah, I agree. I don't think there is much to do here. Going to be a boring week, except no movement, really useless. Some news come out. Ceasefire 60-day ended. Yeah, bull out. Are you not very optimistic? Do you think it's just going to re-escalate again? That's what it sounds like from your message. Simo, good to see you. Actually, I'm not sure if I already said hello to you, Simo. I think maybe I didn't, but oh no, I did. Yeah, you did. You asked how my vacation was going. Good man. How about you? I don't know. Not interested this week unless something comes on. Yeah. So I think we've kind of covered everything so far. We've done, I suppose we've not actually looked at the dollar yet, which is, a core piece of information for us. So when it comes to the dollar, I also don't think there's really anything to do other than just be short. You know, the fundamentals there, we have failed to break any higher than sort of this 102 level. We didn't respect these previous highs in the weekly. Let me zoom in actually here. So I know myself included, but I know a lot of traders here were looking for some sort, you know, the sort of break, retest, continuation idea, which has obviously completely failed. So now we are back inside, technically speaking, back inside this range. And this is the 1 year range of death, really. You know, nothing goes on here. So when it comes to dollar, I actually do think being short is probably the best idea, not financial advice. Sorry, I don't know if you can hear the birds in the background. But yeah, I think shorting dollar is probably just the easiest way forwards. I really don't see a bullish case here. Actually, maybe there is this sort of idea from the low to the high. Let me just close this door. In fact, how much time do I have left? I've only got 5 minutes. It's fine. You can deal with the bird. So yeah, fib from this low to the high into the fib zone, you know, 50% to the 61.8% where price currently is. That could be a slightly redeeming factor, but again, the fundamentals just don't seem to support that. Can this work in Liberia? Can what work in Liberia? What, the edge finder or the strategy or what? Can you guys hear the bird? One opportunity, says the bird. I'm sure you can. You know what, just bear with me. Let me just close the door real quick. I'm still here. I can still chat to you guys. So yeah, I mean, what? Hold on. Yeah, I'm not sure what you mean by Liberia. Oh, right, I'm back. No more bird. So, can we talk about pound dollar? Yeah, we can take a very quick look. I've got about 4 minutes left, so I'll try and keep it short and sweet. Fake out on dollar. Why do you think it's a fake out? Hey, James, hope you're well today. How many years have you been in the markets? As a swing trader, what keeps you under control? You know that you know the type that you don't necessarily get to. Sucked into markets. Okay. Well, I've been trading the markets for, I'd say about 8 years now, roughly, give or take. But I've been swing trading for maybe about 7 of those 8 years. I started really, you know, scalping, day trading, you know, typical sort of guru type information. Then took a bit of a break, then decided I wanted to see how the markets actually worked and how, you know, how people do make money. And that's how I came across institutional trading, then tried to figure out how they do it. And that's what led me to macros. And then that's what led me to swing trading. So yeah, quite a while, but I think it's kind of I'd say it's like a novelty thing. You know, when you start trading or you get a new car, or when you're a kid, you get a new toy and it's all really exciting. You want to use it all the time and play with it all the time. And then it becomes a bit old. It's a bit boring and, you know, it is what it is. That's kind of what it, as far as I'm concerned, that's how it was for trading. You know, when I first started, it was like, oh, I need to be in the markets. I really enjoy this. I like making money. I like the rush. And then it just became a bit boring and old. Now I don't really care that much. You can hear the bird. Oh, my bad. No, I know where Liberia is. I would say I don't know what the Liberia question was, though. I don't know why. I don't know what that was relevant to. I'm still bullish on dollar yen. Yes, I'm still in the long positions. Much love, thanks for the answer. No problem. Okay, so pound dollar, very, very quickly. Yeah, there is nothing really to do here. I'm very much on the same stance as I am with euro dollar, with pound dollar. Now we've broken out this trend line very clearly here. It's more really a case of either we get the pullback actually to retest this trend line into the 50% retracement, or we head higher, retest into this level, and then continue from there. So either one of these pullbacks, I would be happy to be a buyer. The edge finder is, I think, very bullish on, let's just double check. Is it very bullish? Yeah, very bullish with score 13. So fundamentals there, the technicals are lining up somewhat, but there is no entry just yet for me. So it's really a case of just having to wait. Excuse me. Next vacation, consider coming to Nairobi, Kenya. I've never looked into Kenya. Is it nice? For the rest of the year, I'm looking at aluminium, zinc, gold, and Japanese industrials. Very nice. Yeah, I think Asia is, generally speaking, quite a good investment. Obviously not everywhere in Asia, but yeah, I think that I just realized my head's been hanging off the screen. I do apologize. I'm definitely bootlegging and ghetto find these streams this week. But again, I'm doing the best I can. Yeah, I think Asia is quite a good one, really, for a long-term thing. Add nat gas and coca. Yeah, I know the A1 guys added nat gas to the Edge Finder, which was a really nice addition. Okay, so ladies and gentlemen, that is bringing me to the end of my segment. So we have, I think, Alan coming on next. It should be Alan, or at least it normally is. Guys, thank you very much for being here. Stay safe. Don't get margin called. Enjoy the rest of your days, and I will see you all tomorrow. Have a good one.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is ACAP. ACAP is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in a live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. ACAP has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out ACAP if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style, as well as your own risk tolerances. Thanks to ACAP for sponsoring today's content. Now back to the show.
Good morning, A1 Trading. How are you guys doing? Or good evening, good afternoon, wherever you guys are watching. Hope you guys had a great, relaxing, and refreshed weekend. Ready for another week of markets here. Let's go ahead and start this segment here. So let's see what's going on here with currency strength. I did also see something regarding good old U.S. and Iran. So we'll see. We'll see what happens here. But let's look at this here for a second. DXY, the biggest loser of the day, and then you have Kiwi, Aussie, and Swiss franc at the top of the list. So yeah, let me go to look at the actual thing, because I saw it on the Discord. You guys sent a screenshot in the Discord chat. I saw some of it, but I didn't see all of it. So let's see what happens in the world of okay, I think this was it. Reports on the approval to extend the 60-day period between Iran and the U.S. So I thought we were already under a 60-day ceasefire agreement. Am I wrong? Didn't we already establish that? Aren't we already in a MOU signed environment? But I guess we'll have another one. Maybe we have a double layer of MOUs, and maybe that helps a little bit. But nonetheless, I don't think the market's really taking this much. So let's go ahead and talk trading, right? DXY here. This is a very pivotal. You know what? Let me step back a little bit and just keep it high level for a little bit. So we'll start with oil, because this is a very important chart. So oil, maybe this level of resistance holds. I do think that with the price of oil that we stay kind of range bound within this channel here. So as long as you have oil somewhere within this level, I think that is positive. Anything above 88 going into the 90s and above this trend line level, that is problematic. So right now we are in good shape with oil. Yields on Friday were lower. We had really good positive development in that sense. You had essentially the rate hike story starting to diminish a little bit. So you did have the 2-year yield leading lower. It is slightly red here on the day. We'll see what happens. But this one, out of all of them, had made significant progress. So you had this upward trend line here on the 2-year yield. You finally broke it. You're starting to see some rollover with that. And also, too, you did start to see that a little bit with actually, I might be mistaken. I was going to say the 10-year and the 30-year were following suit with that, but they are still elevated. So you still have some indecision here in the medium to long end of the curve. So we'll see what happens there. But I'm definitely monitoring this. With the 2-year yield lower, if this chart continues to head in this direction here, that is going to be good for gold to the upside. That's going to be bad for the US dollar to the downside. So definitely watch that chart. It is very, very important to me. So let me go to CME Fed Watch and see if anything has shifted since Friday. Go to probabilities. We are still ready and priced in for just one rate hike in December, and we hold straight on from there on out. So remember, we were at 1.2.5 rate hikes priced in for 2026. Now we only have one in December and a hold all the way into the end of 2027. So that's going to be good there. As long as you continue to see oil lower, inflation lower, yields lower, then this could probably turn into what Marco and I have discussed before on the stream here, that we just probably just get a one big rate hold, honestly. Right. So that's kind of what I've been thinking of. So we're getting closer to that idea, but not quite yet there. So that's what I'm looking for. Let me go ahead and look at the chat here. Gold fake pump again. You know what, Digital? I hope not, because I'm long gold right now. So I'm long gold. I took another stab at it. So right now, I would hope that we don't see a pump faking gold. Let's see. I'll talk about life-changing move of UJ from 159 to 158, as Simo pointed out. Yeah, what's going on with UJ? You know what? I'm starting to think that UJ may be bottoming out here. So this is what I'm looking at, guys. With my positions here, like I'm long euro dollar, I'm short dollar Swiss, I'm long gold. I'm gonna be looking at this level right here. So I'm gonna go to the daily. And I'm gonna be looking here. And I'm looking to see what happens if you were to get some kind of a bottoming formation or some dip buyers at the 200-day moving average right here, or this level of support. If you start to see a firming out, or maybe start to see US fundamentals starting to improve a little bit to the point where you have the edge finder maybe going back into neutral camp, then I would be looking to maybe see if it's worth accumulating some dollar here at this relative kind of pullback that we're seeing. So if you just measure the move out here from the war start to the peak of it, you are sitting at some very key fib levels. So if the longer term picture, right, the longer term picture wants to be pointing to the upside there, then you're actually right now between the 50 and the 61.8, and the 200-day moving average is literally right there on the 61.8. So if we do get to this point here, and you start to see again US fundamentals start to change, or maybe you get a very extreme flare up in the Middle East stuff going on, then maybe I can look to repivot into maybe either going neutral as far as dollar short, like maybe just liquidating my positions, or being open-minded to the idea of maybe buying some dollar yen. I like dollar yen. We kind of are back above the 200-day moving average. This was a clear dip here. So that's what I'm looking for. So that's what I'm looking for here on dollar yen. If I were to get a pullback revisit to that 200-day moving average, that would make the decision a lot easier. But that's kind of what I'm looking for. As far as my current open positionings that I have euro dollar long, which again is getting close to that 200-day moving average, which is that 200-day moving average on DXY where you would have some support. So again, on this chart, it's the inverse. I would imagine there's some sort of resistance here. So taking profit near the 200-day moving average is something that I want to do. Dollar Swiss, we are in the trade as well. So I have two things happening here. Actually, let's do this. So I had basically these two trend lines, right? So I had if you just go on the lower time frame, we can stick with we'll do the 1 hour. You can see that we have this upward trend line here, right? This one right here, and then you had this other one within that level, or this steeper one. So we broke out of the steeper one to the downside, and now we just need to see what happens if we overcome this one here. If we overcome this one here, then probably we see some continued momentum to the downside, and I just take my profit right there. But we'll see. This one's in profit as well, so I'm just monitoring that. So I have euro dollar long, dollar Swiss short. Also have gold long as well. So we are in good shape. We have a pretty quiet calendar, I would say, going up until Wednesday with FOMC meeting minutes. So I'm actually open-minded to the idea too of kind of going flat up until then. So we'll see what happens. We'll see what happens. Hello, Ella. Hope you're having a good day. Hey, Ellen, asked James the same question, but what keeps you under control? You know, that the type that you don't get stuck into markets, you don't stare at the charts, get emotionally involved. I don't say I keep it under control. Like, I definitely don't keep it. Sorry. I definitely don't keep it under control. Like, I would say I'm healthily obsessed with trading and markets. Like, I don't stare at charts all day per se, but I'm definitely reading a lot, listening to things. It's a, I would say, with anything, like I kind of don't have balance. I know a lot of people talk about like having balance and stuff like that. I like, instead of work life balance, I just like work life integration, because I genuinely like what I do. Like even when I travel, I still do the work that I do. Like I still do the markups, I do the social media stuff as much as I can. I just really enjoy it. So I just love markets. I'm pretty blessed to be able to just live and breathe it all day long. So I kind of don't have control. So it's probably not the answer you're looking for. But following up with that, you say that you're transitioning into a swing trader, but it can be disheartening being a decent amount of profit up and only for a price to reverse and take me out. Okay, that part I can help you with. It is what it is, man. Like with swing trading, you take less hits, right? You swing the bat less amount of times, but I would say the profit potential is equally as the same as if you were to take a bunch of intraday positions. The downfall with taking a bunch of intraday positions is that you can have death by 1,000 cuts, right? So like that's the part, that's the trade-off there. With swing trading, the trade-off is you take a lot less attempts, but then you catch the bigger move. So like while you were trying to capture, or not you specifically, but anyone trying to capture this like piece on an intraday basis, right? They could have took some losses along the way here versus me. I just took one position, waited out, and I just caught the move like this. But with that comes, if you're wrong, then you're wrong, right? And so you just have to wait for the next opportunity, and that could be days, weeks ahead of you. So, with swing trading, the good thing is that you don't have to devote so much time as far as to execution and stuff like that. You can just devote a lot of time to reading, understand what's going on with macro. And in that case, when things are setting up, you don't hesitate to act. Ball out here is diverging a little bit. If you have to choose with your coffee and an unhealthy breakfast, or wait, if you had to choose with coffee and an unhealthy breakfast, I think a bagel or donuts. You know what, ball out? My favorite breakfast item, my favorite unhealthy breakfast item is a kolache. Man, kolaches are just the best. Are just the absolute best. Yep. Baran says, set and forget and get a life. Well, my life is this, but definitely set and forget it, man. And you know what I would say too? Lower your risk size, and setting and forgetting is so easy. But when your size is so big, you are consequentially glued to the charts. Like you just want to stare at the chart, you want to stare at the price. You're driving, you want to stare at the price of what's going on TradingView. You're at the grocery store, you want to stare at the price. When you reduce your size so much to where like you could care less what happens to the trade, and it's just another trade in a basket of thousands of trades, then you can successfully set and forget and get a life. Okay. Let's see. What's your take on euro? I think euro's pretty strong. I mean, clearly we've been seeing that. I'm kind of trading more so the dollar softness story more than the euro strengthening story. But the euro dollar has actually been doing quite well. I think they had pretty good growth as well, like with their PMIs. So we are getting close to this level of resistance with Forex. I like to trade zone to zone, so I don't have the same trailing stop approach methodology. So with this one here, we are approaching the 200-day moving average. We're this level of resistance as well. The trade-off is that if you were to blow off of this level, then I'm already taken out of the market. But with currencies, again, I want to trade zone to zone, capture the movement here, solidify this, get out of it. And then if it does break past, then I could just get in on a retest or something like that. Doesn't mean I'm out forever, but I just want to be able to be mindful that this is a solid level of resistance. You have the 200-day moving average there as well. And we don't know what happens with the macro underneath the euro or the US. And currencies by nature, they're just range bound. So I want to be mindful of that. Trading is a way to get away from working 8 hours a day, not to turn trading to 24 hours a day. Defeats the purpose. That's funny, man. That's funny. That's true. But I would prefer doing what I do for 12, 14 hours a day than like an office job for 8 hours a day, even though I'm working more. I don't know. Am I from Austin? No, I'm from Houston, but I've been bouncing around a lot, and now I'm in Austin. So Austin's more longer term, I think. So we'll be here for a little bit. Hello, everyone. Yoshi, let's have a great weekend ahead of us. Yeah, man, I am certainly for that. So let's see what's going on. Has anything changed since me starting this segment? Okay, yields are the same, 0.10%. Gold is exactly where it was at. Currencies are pretty much exactly where they were at as well. S&P is at all-time highs, and the Nasdaq is trying to catch up there. So let me go to the top setups page here, see what has changed since last week. I'm very curious on that. Let's see. I'm going to take off the neutrals just because I don't want to crowd the chart. And there's no reason to look at them. So let's see. Pound dollar, pound basket still getting a very bullish reading. Gold is getting a very bullish reading. Euro dollar is getting a very bullish reading. What else do we have? Aussie and Kiwi are contenders. On the bearish side, we have some indices actually. We have Russell bearish, Nasdaq bearish, Bitcoin's bearish. That's good. Japanese yen bearish, not the best. You're also getting some dollar bearish, so U.S. dollar as a whole very bearish of -8, and then you also have dollar CAD, dollar Swiss bearish. Yeah, man. We'll see. But everything is pretty much. Also, you live in Kyle, so you're a little bit more down south. That's past Dripping Springs, if I'm not mistaken. Cool. Yeah, man, I love the hill country. It's really peaceful. If you love what you do, you will never work another day of your life. That's very true. I think of my life as one big project. I kind of don't work. But hey, that's me. All right, let's see. Now it's just a matter of managing positions. So I'm in what I'm in. Euro dollar here. Hopefully I get taken out here before FOMC. That way I can just solidify that one, solidify dollar Swiss. With gold, I'll take a trailing stop approach with that one. I'll let that one keep running. Dollar yen conflicts me, guys. I want to buy it, but also I want to be mindful of more dollar downside continuation. And so in that case, if that does play out, I can get a better discount, but I do want to buy dollar yen. Let's see. I'm not going to take it now, of course, but I'm definitely watching it. You're in North Austin? Dude, what's up with you guys? We got some Austin people here. Austin, I didn't know that. That's awesome. I just got here, so I'm learning my way. I go on the weekends and we oops. Can you guys hear me okay? Let me know if you guys can hear me okay. Yes? Okay, perfect. I thought I did something with my mic. Something went off. What was I saying? I forget. Oil, Bitcoin. What's Bitcoin doing? Guys, I really want to participate in Bitcoin. Okay, I'm going to stick to my guns here and not jump ahead of it. I am waiting for a revisit to that 200-day moving average. If I can get there, I'll short it, but I don't want to chase price. But Bitcoin short is something I definitely want to participate in. And I definitely want to participate if this does happen, the break of this like 60K level here and then target 50K. Like I definitely want to be in this trade, but I just have to be so patient because I just want to be with the trend here. I don't want to chase price at all. Bitcoin has been so quiet these last couple of days, these last couple of weeks here. It has literally just been range bound right here, but I definitely want to be short Bitcoin. So we'll see. Hopefully we get a little bit of a pop, something happens and we can get it up here, but I am actively looking to short Bitcoin. Sluggy, if you're out there, I am jealous of your trade, my friend. I know Sluggy's in that trade to the downside, so I'm looking to capture that. And that's about it, honestly, as far as opportunities goes. The obvious trade is just the metals trade, right? So kind of going on to the metals too. Like I'm in the trade right now, but again, looking to take this to break even as soon as structure allows me to. But then ultimately, I am very open-minded to getting stopped out, and I would like to maybe participate again at 4,200, 4,150, 4,125. These areas to me are of interest. I like the gold story to the long side. It's getting a lot better as the day goes by. You have lower inflation, you have oil's tamed, you have the 2-year yield lower, you have a weakening jobs market, you have lots of things just pointing in that direction. Now, I have to ask myself this question, right? Do we get back to all-time highs? I don't think that we're in that environment. Are we in a better environment than we were in March of this year? Absolutely. Absolutely. But are we in the same environment of this right here, where you had the question of how many rate cuts are we getting, the money printer starting on, you had all that stuff. You had, remember, we had a weakening job market late 2025, right? So like that right there, that was this environment. So are we there yet? No, not necessarily. Are we improving? Yes. And where I go with this is like my profit targets, I have to set my expectations the correct way, right? Because if we still don't have rate cuts in the pipeline, if we still don't have a lot of things, right? If we still have the Middle East lingering above us, then at that point, I probably shouldn't expect 5,500 or 5,600, right? Like I should keep my expectations realistic here. But if the story does start to continue to improve, if you have yields making significant progress to the downside, if you have oil lower consecutively, if you have a weakening labor market, or even if you have just like the Middle East stuff ending, then at that point you can raise your expectations for gold profit targets, maybe back to 5,000 or above that, right? But for now, I just need to be cautious of this. And because of that, I say all this to say is that I'm very open-minded to improving my cost basis lower to like 4,200 or 4,120. Because if my upside potential realistically is not 5,400 or 5,600, if my profit potential is maybe 5,000, we'll call it, right? Hypothetically, if that's kind of my realistic ceiling, then I would rather have my cost basis be at 4,120 rather than right here where I'm at right now. You know what I mean? Does that make sense? So I'm very open-minded to that. But the story for gold is improving. I like the trade. Lots of attention is going back into it. You had actually too, what makes me think that we may have some kind of a pullback in gold. So Marco and I were talking about this on Friday, but we're basically asking the question like, okay, we want to pull back in gold, right? But if you have a significant pullback rather fast, then at that point, the question becomes, well, what caused that significant pullback rapidly? And does that reason contradict or disrupt the long trade idea? So we were thinking like, well, what could cause gold to make that drop rather fast without disrupting the theme or the overall thesis to the upside? And one thing it could have been higher inflation. It could have been, if you were to get higher inflation, well, that disrupts the trade. If you were to get higher yields, that'll push gold lower, but then that would crowd the idea. If you were to get a re-escalation in the Middle East war, that would bring gold lower, but then again, that would crowd the idea. So we're like, what could we see to bring gold lower? And one thing that I brought up was sentiment. If you have overextended sentiment, you can get a flush out, right? Weak hands getting taken out. But then that doesn't contradict the overall macro and story to the upside. So that's what I'm looking for gold. And one thing that I did see was if we go to the sentiment side of things, we did have some crowded positioning. So let's go down the list and see what it looks like now. So Saif, you're right on the ball, right, my friend. We're going to go into some sentiment reads here real quickly. So we're going to go to gold. And we'll see. It was very, very bullish last week. So we'll see if it gets overextended. That could be a problem, right? So we're still bullish. We're not as bullish as we were maybe up here, but something to look at. But if this chart right here does get super overextended, then maybe you could see a quick pullback in gold, and that could present a re-enter opportunity. Put to call ratio is something that I want to see as well. Let's go to gold. Let's see. It's not super extended, but nonetheless, it is in the bullish area here. So that's something that we have to look out for as well. And then retail sentiment. I am very curious to see what retail sentiment is doing on gold. Let's just do metals only. And gold is 85% long, right? So if you do start to see the put to call ratio continue to get super bullish on the call side, if you see that net options volume flow get super bullish, and you see retail still piled in long for the majority, maybe that could cause some overcrowdedness at these levels. and then you can get a flush out meaningfully enough to get you back to 4,200 or 4,150 or 4,125 without disrupting the macro narrative. So that's kind of what I was looking at, my thought process, my way of thinking with Marco and myself. USD CAD, we have some CAD news here. It's Canadian CPI coming in 10 minutes. Let's see what's going on with Canada here. So right when I pivot out to when I give the live stream to Nick, Canadian CPI will be coming out. So let's look at it here real quickly, right? If you see right now, previous was 2.8. Forecast is expected to go higher at 2.9%. If you see anything above 2.9, that would probably be strong for the Canadian dollar. In that case, dollar CAD, right? Dollar CAD continues lower. That'll probably be the obvious scenario. If you were to get a cool print, then maybe this 200-day moving average holds a little bit. Maybe see price action stall. But this is a very key level too. I was at one point here looking at buying dollar CAD for the long term at the 200-day moving average, and that's still not out of the gates there. So I may still participate in that. Again, I need to see what happens here with DXY. Really, if we find some support around here, if we do, then maybe dollar yen long, right? Dollar yen long. We do have Bank of Japan supposed to do something this week. I think they are pretty certain to go ahead and raise interest rates. Let's see, Forex Factory. I'm pretty confident that's the case. Maybe not this week. I may be mistaken. Let's see. Okay, not this week. Next week, maybe? No. We have Jackson Hole August 27th. Maybe that could be a pivot point. Maybe. Yeah, maybe that could be a pivot point. Either the narrative continues to confirm neutral to dovish or slightly hawkish. Okay. September. I'm way off, guys. My apologies. September. And I think that one is supposed to be confirmed a raise hike. Like the probability of that is pretty high. So I do like dollar yen to the upside, guys. I do like the rate differential. I like it. Gotta update my Chrome. I guess I have a thing with not updating my stuff, huh? Because you guys were on me for not updating TradingView, and I do gotta update my Chrome as well, it seems like. My apologies. I'll do my best. All right, let's see. Markets are getting close to opening up. CAD CPI. Oh, okay. New thing out of Iran there. Ball out right on the dot. Let's see what happened. Senior Iranian official. Iran has decided to shift its policy from defensive to fully offensive. Okay. Senior Iranian official again, pressuring the U.S. on relying on mediators to reach a lasting peace is not realistic. That I can agree with. Okay. I think that with the mediators, it just makes it harder to get something done. It's better to just talk to the source directly, I would say. But guys, this is nothing new here, though. Like this is a you could call it a re-escalation, or this is tension, but nothing out of the ordinary. Like at what point, like for me, this is a boy who cried wolf situation. Okay. There's a wolf in town. There's a wolf in town. There's a wolf in town. Nothing happened. So that's kind of how I see it. All Iranian entities will be prepared to escalate the tensions in the Hormuz Strait if the diplomacy fails. So nothing new, man. Who's ready for this to be over? Type 1 into the chat. This was there was lots of volatility and excitement in the beginning of the war, like lots of potential there when it first started. But now as it's starting to drag on, it just becomes so, I think annoying is the good word. Modi one, yeah. Annoying is the word. Simo says 4. Yeah, nothing out of the ordinary, I would say. So, is it a red folder news or is it a red thing on Financial Juice? Yes, but it's the same thing we've been seeing the whole time. So we'll see. The way I look at this, or the way I kind of digest it, is I put my personal opinions to the side and I let oil do the talking and I do yield do the talking. If oil continues higher or breaks out higher, makes any significant moves, or if yields also start to make significant moves, then I look and I read the situation. But if nothing happens, then it's just another headline that has no weight to it. So I put my personal opinions to the side and I just refer to the charts for them to give me some guidance. Ron says very annoying. Yep. Simo says Alan 4 means someone give them what they want. Man, I would imagine that they're hurting on both sides, you know? All right, CAD CPI, and then I'm going to transition it over to Nick, 3.3%. So higher than the previous number and higher than the forecast. I would imagine dollar CAD is lower on this and it continues sliding. The real question becomes, do we overcome the 200-day moving average? And if so, then good for me. Maybe I can get a better longer term buy the dip opportunity on dollar CAD. If I just put a fib here from low to high, 61.8 is right around at 1.3800. So we'll see. But again, I don't want to get ahead of myself because you do have a very bearish dollar kind of theme that we're seeing right now. So that's what I'm looking at. We'll go into it deeper on my second segment, but I'm going to hand over the show to Nick. Thank you guys so much for watching. See you guys in about 30 minutes. Bye-bye.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back. Hope you guys are doing well. Shout out Alan for the great segment. As always, you guys will have more of him in just a little bit. He'll be back. Taking a look at some charts here this morning. I listened to this weekend. I spent a lot of time in the yard working on stuff, just cleaning things up. And the woods by my house are like all overgrown. So I've been working on that and just getting that all cleared out. Well, anyways, it gave me a chance to plug in my headphones and listen to a bunch of market commentary stuff. And so I am fresh with all sorts of thoughts and ideas from that hopefully I can share with you all some of my findings. I listened to a lot of the Bank of Japan, Japanese yen stuff that, we talked about for a long time on the channel. I heard Alan talk a little bit about that willingness to potentially stay short the yen. It's actually a fascinating thing that's going on right now, specifically like the US's involvement in the currency intervention stuff is really interesting. And just because and actually I didn't know this, but there's been a longstanding kind of policy or uh, thought process where the U.S. government doesn't get involved in currency intervention. So it's very interesting to kind of see that posturing from the you know, the leader of our financial system, essentially Scott Bessent, um, you know, kind of taking on the role. And then I also didn't know this. Um, so that's obviously the yen situation is a situation of stress. Like there's a lot of stress on a never-ending weakening yen. There's a problem with the system. There's almost like it's an impossible puzzle to solve almost. And what I didn't know about Scott Bessent, well, I didn't know that he has a history as a bond trader and a hedge fund manager. And like, he's a market savvy dude. Like, he's very knowledgeable about markets. He's got a incredible track record and he's managed money professional. He knows markets. I mean, that's why he's got the job that he's got. So what I found interesting, and I didn't know about him though, is that a lot of like in his past, he was the young buck hedge fund trader watching currency stresses like this and trading against them. So maybe a Scott Bessent 30 years ago would be aggressively buying yen pairs and essentially noticing that, hey, they're caught in a trap here where the yen just continuously weakens, and trading the upside against that stressed out, you know, system. I listened to somebody who was breaking that down. That was kind of like a playbook. So it's interesting to see him now on the other side of it as the government figure trying to fight all of the there's like blood in the water type of thing, right? People are sensing like they're in trouble. The US is involved because they kind of have to be. There's been, I also listened to on that same narrative, the concept of like, if you look at yields, they're at the highest level they've been in quite some time. The 30-year yield, I actually don't know. I think it was 2007 is the last time we've had yields at the 30-year at this level. Yeah, look at this. 2007 is the last time you had US Treasuries trading as cheaply, essentially offering as much yield as they currently are. The bond market is requiring more and more yield in order to borrow money. The bond investors out there globally are saying, we are not giving US government money. We're not allowing them to borrow money unless they ante up, offer more and more yield. That's the way to read this. Well, the question is why? Why is that? Well, one of the big stressors is obviously Japan. If Japan is sitting there and they're like, we need to strengthen the yen, that is a requirement for us. We need to strengthen the yen. We need to hike interest rates. How are they going to do that? Well, what do they own with all that borrowed yen, et cetera? Well, they own a lot of US treasuries. And so if they're offloading or need to offload US treasuries, the bond market senses that stress and they're like, oh, we have a huge potential seller, the Japanese, who might need to offload a massive amount. They're like our biggest customer of US debt, US treasuries, right? If they need to unload that, this thing could surge much higher. And so I think the bond market is front running that play. And I also think it's kind of interesting because if Scott Bessent is, you know, correct in thinking that if essentially he's right now, he's borrowing short end and looking for a chance for yields on the long term to come down, and then he can reallocate debt. It was I'll give credit where it's due. I was listening to Patrick Boyles. I'm sure many of you guys know him. He's a phenomenal content creator in the space. Patrick Boyle did a thorough breakdown on this. It was a remarkably good video. So take some time if you are interested in this subject. He is more knowledgeable than I am on the subject for sure, and really good listen. But he broke down the Scott Bessent situation, the Treasury, the Bank of Japan stuff. What I heard out of all of it is that, you know, whenever the U.S. is frantically getting involved in something like that, it's definitely blood in the water, in my opinion. Like, I don't think that situation is likely to, like, you already have U.S. yields ripping higher. I would actually take the other side of that trade and think, which I have thought for most of this year, that yields are generally going to stay in an uptrend for a while. And I don't know when that matters, but I do know that historically speaking, the most consistent thing that really topples stock markets is yields blowing out. Like that is the thing. Because what happens is people say, okay, if you're leveraged long a bunch of AI tech stocks or software stocks in the past or internet stocks of the past, if you're leveraged up to the T on that, and then that all kind of gets like challenged by massive borrowing costs ripping higher, suddenly you got problems and people have to unwind their carry trade. They have to unwind their leverage. They have to, all of that can topple over very quickly. I know this is kind of high level stuff. Zef in the chat, I hope I said your name correctly, says gold and silver. We are talking about gold and silver. This right here, this is probably the most impactful chart to gold and silver. In fact, I would look at this, the 10 and the 30-year yield, more so than gold and silver if you really want to try and find directional bias, in my personal opinion. Yields matter tremendously to gold and silver and to stocks. What's interesting to me is that gold's kind of in this sweet spot right now where the short end of the curve, right, the 2-year yield is actually kind of moving lower. I heard Alan briefly mention this. The 2-year yield's moving lower, but the long-term bonds are sitting at highs. What does that tell you? Well, that tells you in the short run, the Fed is not expected to hike rates very much. Maybe they were over here, but that has subdued a little bit, subsided. Okay, but what about the long curve? What about the long end? Long-term borrowing rates are not set by the Fed. They're set by the marketplace itself. And the marketplace itself is saying, yeah, inflation's going to stay elevated. National debts are skyrocketing. And we're worried about that Bank of Japan stuff. If they're going to hike interest rates or they need to support the yen more aggressively, those are going to be things that cause, a global flooding. Think about this. If Japan needs to offload a bunch of US treasuries, what does that do to the supply and demand of US treasuries? The supply goes up, hence the demand goes down. If they flood the market with treasuries, which is, in my opinion, I think very obviously, that's why the US is getting involved. They're trying to help so that that does not happen. Because if supply goes up dramatically for US treasuries, UST, right? US treasuries, if that happens, the demand goes down. So in order to get people to still be buying them, yield off as offered has to go up. That's why when bond prices go down, right, yield on bonds goes up. This feels like a Khan Academy episode all of a sudden. It's bond market stuff is complex. It is not easy, but it is, in my opinion, one of the most important markets to watch. It tells you a lot about where the money printer is trending. I think it is actually one of the more quiet, concerning things. I know that's kind of always part of the bear crowd's rhetoric is, well, don't forget about BOJ. It's gonna crash the whole market. And to be honest, it might. The better question, the more logical thing, in my opinion, is acknowledging that I don't know when yields matter to the market. Like what I'm saying, all that stuff, I have no idea if that means that we have impending doom on the stock market and we're going to see a 35% correction like tomorrow. Will it, if yields continue to move higher, I think almost certainly that will start to matter to the stock market. It will start to matter to gold. It will start to matter if the Fed has to do some, drastic measures to support the dollar suddenly. I think gold's going to skyrocket and then drop if the Fed decides to rate hike aggressively like the Volcker Fed did back in the day. That destroyed gold value. Gold ripped higher on massive inflation, uncertainty, and distrust in the Federal Reserve. And then the Fed got super serious on fighting inflation, rose interest rates like a monster, and gold collapsed. So nothing is safe. Know your macro or be doomed to get bulldozed by it. So I don't know where yields, I don't know what the trigger point is. Is 4.8 on the 10-year? Is that the number that freaks the market out? Is 4.9? Is 5%? I don't know. But the higher we climb on yields, the more I start to look at it and I'm like, ooh, you know, being leveraged long tech stocks sounds like a scarier and scarier trade as borrowing costs keep going up. Now, we've spent 15 minutes on the bond market. So if you're still here with me and you've stuck through that, you are either thoroughly confused or you really love this stuff, or some concept or some combination of the two. So thank you for being here. I hope you guys are having a good, I know I just blasted you on a Monday morning with a bunch of bond market rhetoric. So I know that someone is out there and like, whoa, okay, that was a lot and that was really confusing. I encourage you, save this stream, come back and watch that part again if you need to. Watch it a few times. There's no shortcut to learning this stuff. Take some time. Pick up a little thing here and there every single time you watch the stream. Love is confusing. This stuff takes time to learn, and that's okay. If you are at the realization that this stuff is complex and difficult and trading is hard, you are at the maturity level that most traders never even make it to. Most traders think this stuff is easy, and they never really get past that point. They think it's easy, and they blow a bunch of money, and then they say it's a scam. There's like this jump from it's easy to it's a scam. The maturity in trading is realizing you think it's easy initially, then you realize this thing is really, really complex. It's competitive. This is a landscape where if you're going to make money, you got to take it from people that are also in the markets. And guess who else is in the markets? A lot of smart people. So you're trying to take money from people who know tremendous amounts of stuff about it. That's why trading's hard. Ultimately, you're trying to take money from a system where the smart players are the big ones playing against you. So if you're going to do it, it's possible, but understand it's going to be a long, arduous journey, and you are going to have to grind. And if you can accept that, punch the subscribe button, hit the thumbs up button, and join us on this journey we call trading, because it is a lot of fun. You know, I heard Alan talking about it, you know, work goes with him everywhere. Same thing. I don't feel like I've worked in years. Like, I don't feel like I've punched in. There are times where I have to do administrative stuff here at A1. That's not really fun. I don't like doing paperwork and taxes and all that stuff. Payroll, all that stuff. That's boring. But man, I feel like I never work, right? It's I'm building software all day long. Like, I'm doing work, but I love it. So it doesn't feel like work. And that's a massive blessing. Hold on one second, guys. My wife is just blowing up my phone. Okay, sorry. All good. Just she called me twice, so I just want to make sure everything's all good. I think she probably is trying to hold back from full port gold buys, so I just had to tell her, hold off, wait a second till I get home, and then we can do it together. So, speaking of gold buys, am I buying gold this week? I hope so, but I have to see a little bit of a pullback here. If we can get the 38.2 to 61.8, if this comes into my vision, I'm going to be looking at longs on gold. What does your wife do for work? She's in she works at Medtronic, which MDT, publicly traded company. Medtronic is a medical device company. They build all sorts of stuff. They build like pacemakers and things like that. So she's in their marketing world. So yeah, very cool stuff. So if you ever see me just kind of shut down this YouTube channel and start chilling at home, you know why. It's because wife's got it from there, and I'm going to just take it easy at some point. I'm just waiting for her to say go. Do you stream from an office or home? I'm at our office today. We're in office some days. We are at home the other days. Because she retired you. Yeah. That's the dream, man. You know, I can just sit back and trade, lose our money slowly. Wouldn't that be nice? Just kidding. Okay, so Dow Jones is actually weaker than the other ones. Like I said, I'm looking for gold longs. I think all of that stuff about, you know, yields blowing out and concerns about central banks, the one place I feel most cozy about it in the meantime is, generally speaking, gold on retracements. It's never a full foolproof plan to ever take any sort of trade. Nothing is guaranteed, but I generally like gold more than I like stocks right now. I think stocks would be attractive if you had a 10-15% pullback, but we're not there right now. So I don't really love stocks from a longer term play. Gold I like from both a short and longer term play. I like the upside potential from both, a longer term buy the dip as well as a shorter term, keeping like your 4-hour chart close. I'm looking at this from a 61.8% retracement. A pullback in this one looks attractive for long side continuations of this recent momentum pickup that we've seen. I also, by the way, here's Japanese yen, just because we were talking a little bit about it. Japanese yen on Edgefinder is getting a very bearish overall reading. They are expected to hike interest rates, but the theme has been for a while that they're going to hike interest rates, but it's going to be at a pace that is slower than what they need to do in the eyes of the market to sort of strengthen the Japanese yen. I would not be surprised if you do get more intervention episodes where, I heard someone say that they want the yen down at 140 versus the dollar, 150 versus the dollar. I think it's possible, but at all times, anything is possible. I would generally think that the path of least resistance for the yen is to move higher. The dollar versus the yen to move higher. I actually like other currencies against the yen a little bit more. Maybe euro yen, I like to the upside. We had a huge bounce off this area here. I generally would be more willing to short the yen than long the yen. Yes, you could get some interventions. You could get some sharp drops if they get more serious. You can never really time those things perfectly. So instead of trying, what I would do is keep my size small enough that if I got caught in a bad luck moment, that it wouldn't wipe me out, right? I'm just going to have a very small size. I know my friend Forex James here, regular streamer, he was on earlier. He is playing UJ, I believe, with a DCA approach, dollar cost average, which everything carries risk, but he's sizing it in a way that it's not going to crush him if he is, wrong about dollar yen continuing higher. But I think probability wise, this is an anecdotal number. I'm going to give it a 75% chance that you are significantly higher. That's a purposefully ambiguous term here. By end of year, 75%. I think if you were to say a 1-to-1, this is my personal opinion. I could be dead wrong. If we're going 1-to-1 here, let's just say this to this. I think you have 70% chance this happens, let's call it 30% chance this happens. That's still not necessarily like, and maybe that's a little generous. Maybe I'd go more like 60-40. But that's a trade generally I'm looking to take. So to sweeten the deal even more, what I'd maybe be looking for is retracements on this. And or if you were to break and retest this 200-day moving average, like I still get technical with it where I could maybe define my risk a little bit better than that. But even still, I want to keep a reasonably wider stop loss simply because these intervention moves can be hundreds of pips really quick. So if you are trying to, let me just burst a little bit of someone's bubble out there. If you've got a 20 pip stop loss on euro yen and you get an intervention moment, guess what? You're not getting filled at 20 pips. You're going to get filled on your closeout position if you're long. Much more. It could be 40 pips, 50 pips. You could suddenly have a disaster trade on your hands. So I'm more of a fan of swing trading yen pairs with a wider stop and smaller size. That's my opinion. Yeah. King of Kings, $5 donation. Thank you so much. That's going straight to, as you know it, the coffee fund. I tell you that every time. Appreciate you. Your coffee this morning here at A1 at the office is on you, my friend. You are awesome. Good morning, Nick. Have you noticed a lot of creators pushing order flow and acting like that's the only way to make money in the markets now? The markets are an interesting place, man, because you have all these different content creators, even myself, who have they call it talking their book, right? If you listen to me and you spend time, well, not just me, all of the wonderful guys and the single female creator that we now have on our show, which is awesome. She's coming back tomorrow, Marilee. She's remarkably talented fundamental analysis person coming back to join the show. Anyways, if you listen to us, we're going to talk our book. What is our book? Fundamental analysis, swing trading, macro plus technicals. We are a little bit biased. Everyone has their bias. There's not, though. I've seen and interviewed many different traders of different walks of life. Anyone who believes that it's their way or the highway in trading is not necessarily an unprofitable trader, but maybe just not as as a worldly traveled or experienced trader is what I'd say. Cheryl says, do whatever works for you. Absolutely. You guys, I'm telling you, I know exactly what it's like to be newer to this stuff, watching content, and you've got conflicting views. One guy says this, one lady says that. One person says swing trading is stressful. One person says day trading is stressful. And you can get ragdolled, man. Like if you're just listening and turning your head, oh my gosh, this person said this. Oh, Nick never said, or Nick said that it doesn't matter what days you trade, but this other content creator said never trade Fridays. Fridays are manipulated. Oh, Wednesdays are reversals days. It's all noise, man. Self-reliance, okay? Self-reliance. Say it with me at home. Someone's going to say it with me. Self-reliance in trading is key. Test yourself, test your strategies, find what works with you internally, okay? No one else is going to hand you on a silver platter. No one is coming to save you in trading. Stuff is hard AF. Figure it out for yourself. Take bits of knowledge from people that you watch, people that you listen to. And by the way, don't listen to anyone who doesn't show you a track record. Please stop doing that. There's so many candy content creators in trading, it's not even funny. People who have no verified track record, who just sound smart. They don't show you their account. They don't show you trades that they're taking. They only ever speak in hindsight. They show you what worked after it worked. And they speak in absolutes. If someone speaks in absolutes, ooh, run for the hills, man. Run for the hills. Ain't no such thing as absolutes in trading. Just not a thing, okay? Self-reliance. Cheryl's got it written down. Guys, she's written it down. I'm going to stamp it on my forehead. Okay. You can learn a lot from different creators, but don't take anything, take everything you see from me, from anyone else with a grain of salt, and trust yourself. Study, hard work. It's the only way. There's no holy grail. There's not one path that works and the others don't work. Anybody who is shouting that way or saying that their method is superior is not very smart or is selling you something that you don't need. One or the other. Dumb or scamming. There's your harsh Monday morning lesson. Clip farming, Nick? Yeah, that was it. So Jim Naz, if you could just clip that one for me and we'll post it and tag all the other content creators and start a war. No, seriously though, just self-reliance. Like that is really, really critical. Only real stock advice I've heard on YouTube for once. Take everyone for a grain of salt. If my channel helps you, awesome. But I don't consider myself a trading educator. I don't consider myself having students. I find that stuff to be cringe because I know what works for me, but I can't tell you what's going to work for you. I'm not a financial advisor. I'm just trading and doing my thing on YouTube. And if what I say in some way helps you positively, I'm thrilled about it. And I've learned a tremendous amount of things from creators that I watched on YouTube that were traders, but no one handed me the system that I trade today. And if you're looking for that, you're in the wrong industry. Trading has the least, it's like entrepreneurship. If you want to become a doctor or a lawyer or a professor or something of that nature, there's somewhat of a path laid out that you can follow and get to where you want to go. You have options within that path, but it's a set path. Entrepreneurship, trading, none of that. You have to pave your own path. There's no path that you can just easily follow, traverse, and then you're all good. Thank you very much for the £5 there. Hi, Nick. Are you in any trades at the moment that look good? Thank you for the question, and thank you very much for the donation to the stream. You're supporting our, like I said, our coffee fund today is, our tin can is full of some dollars and some British pounds. So thank you for that. Appreciate you. I actually just ordered coffee for the office this morning, so appreciate you. Okay, so am I in any trades right now? I have to say it's a bit dry for me in terms of indices, commodities. I have several stock positions open, which I know I don't usually talk about on this channel, and I do have it on my second channel. I posted on the Trader Nick Stocks channel, guys. Kind of I'm trying to get back active over there. I went long AVGO. This is Broadcom. Pull back to this area here. I am long with a stop loss in. So far, this trade's in profit. I bought it towards the low on Friday, so we'll see if that one works out. I have several stock positions open right now. I'm also, here's a couple ones that aren't working. I'm long UNH. So this trade is somewhat going against me. I'm long Kimberly Clark. This one's going well. I'm long Amazon. This one's going really well. I bought, towards the bottom end of that range. Meta is flat for me. So I have a bunch of stock trades. Way more active than I usually am on stocks. Trader Nick Stocks is what it is. Just type in Trader Nick and then it's a space stocks. If you're interested in specifically stock commentary, check me out. Thank you very much, Alan. Appreciate you. Yeah, if you want to go check it out, I have been finding a lot of stock momentum plays. It's always been something that I've done, but on the secondary YouTube channel, I've been so busy with the amount of content that we put out, but I'm trying to get more active over there. In terms of gold, I'll tell you the best trade that I see right now, the trade that I like the most is gold longs, but it's not ready for me. And so I am sitting on my hands. If we get some retracements this week, I am looking to buy. If we get some breakdowns in oil, I'm looking to sell. Counterintuitive, but I would like to see oil break lows. And then I'm looking to sell oil. Let me really quick. I also like some of the yen pairs. I would be looking for, if we get some yen strength this week, I'd be looking to sell that strength. And then US oil here. I do like the bearish side of oil. So when I'm looking at oil, though, it's sort of stuck in a range-bound environment. I'd like to see this thing take out the lows. If that happens, I'm looking to short beneath 76, looking for continuation plays. And I don't particularly love the idea of shorting currently. I don't like this spot, but I would like the idea of either shorting. This is the preferred trade in my view, would be a breakdown in oil, and then looking for the retracement sells. I also would potentially be looking at something like this, a rally up into the 92.5. But I heard Alan make a good point, and I just want to highlight this, and then I'll throw the show back over to him. Pointing out, like, when you're looking at something like gold and you're saying, I want to buy the retracement, the reason I like to use market orders rather than limit orders is because if this thing drops very quickly, and it's for a reason that suddenly contradicts sharply why I want to be long, I might have to rethink the long. Right. So that's why I don't have just a pending limit order there, is because I want to see what's going on at that time. I want to make sure that the trade is still the trade that I want. Because, of course, I'm not just a technical trader. I use macro. So I do like gold quite a bit right now. I heard Alan point out that it is potentially sentiment flipping. Like if you get some short-term fear coming into gold, that is definitely a potential candidate that could help to usher in the sell-off. People were saying, on my YouTube channel constantly recently, gold's not going to pull back at all. Like you're going to miss the boat. And the answer is maybe, or the response I gave is, yeah, maybe I will. But for me to take the trade, the risk reward sweetens and is worth the potential loss that I could take right here. If I buy right here, I don't know where to put a stop. I want to put my stop. If I were to get long gold, I want to put my stop below the 61.8. So I don't want to take the trade here because my risk reward looks really bad, right? But if you give me that 50% retracement, something like this, I could reasonably put my stop somewhere around here and still feel like I have a really sweet risk reward trade. And if that trade never comes, there's no setup, nothing to do. Eat it, deal with it, move on, cry in the corner, whatever you need to do. But for me, I'm not taking the trade unless the trade comes to me. And I think that is critical. Whatever your style of trading, whether if you're a breakout trader, if you're a reversal trader, if you're a retest trader, if you're a day trader, whatever, the trade has to come to you. And for me, that is the trade I would take. That's not necessarily the trade that I think is inevitably going to happen. There's a big difference. So please be careful with that thinking. A lot of times when I say that, people are like, okay, so I'm going to short because Nick thinks it's good. I don't think it's going to retrace. I'm saying if it retraces, I like the long. If it doesn't, there's no trade for me. Alternatively, if we got this, right, break higher, then we came back into this area, I'm okay with that. I just feel like right now we have not fully cleared this zone. I'd like to see either a resumption of strength and then a normal retest or a normal kind of maybe respect of this 4,500 round number zone of resistance. Then I could maybe long there. So I like both of these scenarios, but these would be the scenarios where I can set up a trade where the risk reward is small risk, big potential reward. Let that winner run. Does that make sense? That's my game plan with gold this week. If I can get it, if I cannot, then I wait and I just look for other setups. I mean, the nice thing is I trade a lot of different things. Like I mentioned, I have several stock trades that are going on right now that are keeping me busy, and I don't have to sit here and just kind of do nothing. I can wait for gold, and if gold sets up, great. If not, I have several other things at play. And I don't trade only gold. Euro dollar, yeah, we'll do euro dollar really quick, and then I got to throw the show back over to Alan. Pretty much, I am dollar bearish. I think you've had a round of softer than expected economic data for the United States. US dollar here getting a -8 on Edgefinder. By the way, if you guys want to try out Edgefinder, we'll drop a link here in the chat to how you can do that. Here it is right here. Boom. If you guys want to try out the software that I'm using to scan macroeconomic data, crowd sentiment, institutional commitment of traders data, et cetera, there it is. Try it out right there. Link is in the live stream chat or in the description. Fundamentals getting a bearish reading, inflation, jobs market, and economic growth all kind of in synergy here. Bearish outlook for the dollar. So I take that with me. I say, okay, yeah, if euro dollar retraces, then I want to buy the euro versus the dollar personally. So I like this 50% to 61.8% retracement on this one as well. Guys, with that said, I'm going to throw the show back over to Alan. He is here for his next segment. Apologies for running over a few minutes here, Alan. We'll play that quick break, and then Alan is up after this. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. I'm back once again. That was probably one of my favorite segments from Nick. I loved it. We had some bond talk, and then we had some hot takes, and we had some some wisdom there. So it was a fantastic segment here. Hopefully I can carry it on just as good as he can. All right, let's get to it. Interesting comment to start off my second segment. How we can make more money without loss? That's a great question. If you ever find the answer to that one, please reach out to me. Find me wherever I am at, and I will put it all with you, my friend. But I don't have an answer for you. Someone says also to no risk, no Ferrari. Well, how about you risk so much in the process of trying to get the Ferrari to where you lose it all, and then you have nothing to get at all, right? You go from no risk, no Ferrari to all the risk. Now you have a beat up car, a bike, right? So I don't like that. I don't like that saying. And I know you're joking, no risk, no Ferrari. But for the people here that are in the chat that are seeing that, or they have that mindset, it's like, look, man, slow and steady is gonna take you where you want to go. If you go too fast, you risk blowing up, right? So if you want to take the risk of blowing up, then go fast by all means, but don't do it. Don't do it. From the future. Maybe he's from the future. Yoshi says, impossible, no risk, no Rari. Well, again, Yoshi, I'm throwing it back to you, man. Just like my friend over there. If you have the answer, if you can find the risk with the Ferrari, fine, tell me. But if not, stay away, please. Find it and then sell it as a course. It seems like a lot of people have maybe found that answer. Isn't that funny? Right? When you go out there into the world of social media trading, everyone has the Ferrari with the no risk. All you gotta do is just sign up though, and eventually you'll get it. But yeah, someone says social media has ruined trading forever. I think over a long period of time, I think this is what happens. Okay, it's kind of like delayed gratification. But I personally, and this happened to me, by the way, so I'm speaking from experience. You have the idea that you want to get into trading. So what do? You self-educate. You go on social media, you go on YouTube, you do the best you can. And the immediate thing that you run into is like the shiny golden carrot, right? So you kind of chase that, whatever. And I think two things ultimately happens. You either see that it's not for you, or you go through so much of the BS content that eventually you stumble upon something that is real and then you stay there. You know what I mean? So I think like with A1 trading, you're kind of at the end of that spectrum where like, or the end of the timeline where like, okay, by the time you get here, you're already serious or whatever. You've already went through the journey or the passage of filtering through the bad stuff. You know what I mean? So we may not get you right at front. It would be nice if we do, right? But maybe you have to go through some pain a little bit to end up over here, and then you're here long term, right? I think is that safe to say, guys? Are you guys here for the long term or not? Let me know in the chat. But that's just kind of how I see it. Like, people, they get tired of it. Like if nothing works, right? If they're going through all this content and it's not working, they're gonna move on, and then eventually they'll end up where they end up, or the long stretch. So yeah, Jeff says mine is no risk, no Bugatti. There you go. Yep, no risk, no Bugatti. I kind of wouldn't want a Bugatti, man. It's a pain. You can't drive it. It costs so much to maintain it. Some people don't even want to insure it. It's too much, man. It's like a job just to have that car. Would like to know my opinion on Aussie CAD. Let's look at Aussie CAD. So Canada had some hotter inflation readings today. So Canada, I would imagine, is stronger on the day. Dollar CAD is softer on the day, so you can see that here. But let's look at Aussie Canada, because Aussie is also strong too, right? So Aussie has had some reignition there on the rate hike story. So there it is right there for you to answer that question. Aussie CAD moving sideways there. Why? Because they are both strong. So when you have two assets against each other that are strong, you likely go nowhere and you kind of stay sideways. But if you go to dollar CAD, for example, that is one where the US fundamental picture has weakened a lot, right? You have that going for it. And then you have Canada getting stronger, right? You have the US going lower. This is the US. And then you have Canada getting stronger. That's Canada. You can see that, for the longer that this goes on, the divergence widens a little bit. And so you're seeing that with dollar CAD, right? Look at that. Boom. Clean move to the downside. This is a chart that you want to trade where it's trending. This one is not one that you want to trade, because what are you doing here? You're stuck. Unless you bought right here, you're stuck. If you bought here, you're stuck. If you bought here, you're stuck. If you bought here, you're stuck. So with currencies, you want to make sure that you're trading against a really strong, against a very weak economy. EdgeFinder does this job for you. So if you go to the top setups page, boom, right here, it'll give you which one's super strong, which one's super weak. Right off the rip, we can go top down. Pound dollar, for example, doing strong relative compared to the US. Look at that. Clean move to the upside. This is going to be one big EdgeFinder pitch until Marco comes on. So brace yourselves for this, okay? Gold. Gold's picture has looked way better in the recent times versus the US has weakened. What would you see here with gold? Gold is higher. Okay. It's very simple. It's very vanilla. And then if you go to something neutral, it's going to be sideways, and you want to avoid that chart. So it's super, super simple. So if you want to not trade and get stuck into sideways movements or lackluster assets and move to stuff that's trending, move to something that's in play, all you have to do is get yourself a copy of the Edge Finder, do a little bit of homework, keep up with the macro, be self-reliant, as Nick said earlier, and you'll be in good hands. Marco, how you doing, man?
Hello, Alan. I'm doing well. What about you?
Pretty good, pretty good. Can't complain.
Awesome, awesome. So what do you think of Monday, of this opening day?
I think that you probably see some dollar weakness continuing because you do have a pretty quiet economic calendar going up until Wednesday. You have Canada CPI, for example, that's probably going to keep dollar CAD lower because it came in hotter than expected. You do have some contradicting headlines this morning. So in the beginning of the morning, you had a 60-day extension of the ceasefire agreement. And then you had Iran saying that they're going to get more offensive. So, to me, I think it's a washout. I look at the price of oil. Oil's doing nothing. I look at yields, and they're pretty hanging out there doing nothing as well. So I think that the trend continues. We've clearly seen a recent kind of picture of what the U.S. fundamentals look like, and it's not good, right? So you have cooling inflation, weaker labor market, yada yada yada. So I think the continuation to the downside for dollar kind of continues there. Now, how much further is the big question. We do have the 200-day moving average right here, lining up at this 99.25 level. And then you also have here the 61.8% retracement level on this move. So when the war started, this right here, the swing low to the swing high, you're actually at the 61.8% retracement level. So if there are buyers in this market that want to take dollar higher, this would be the time to do it. And I don't know if you were listening to Nick's segment, like in the beginning, Marco, when he was talking about the bottom market, but like the long end of the curve is still higher. So that is justification for me to say maybe in the longer term, you do have some dollar strength. Like I know the short end is trying to make progress to the downside. But at one point, does the short end stop working and people start looking at the long end and saying, hey, you got to pay attention over here. And at that point, you have some kind of a bottoming out in dollar. So I have three trades open, Marco. I have euro dollar long, which I'm looking to take profit at the 200-day moving average, which would be the same 200-day moving average on the DXY. So I want to, take something off the table there. I have dollar Swiss short as well, which I might look to take off. I don't know. We have like this trend line here that we need to overcome. So we have this one here that we reach past, and now we have this one here. And then I have gold long as well. So my question is, or what I have to figure out and answer myself is, I think what I want to do is start securing some profits as you get to this level here, because this could be a meaningful level where you may have a fight between buyers and sellers. And so, you could see some choppiness, or you could see either one of the two things. You either see a break below the 61.8 and continuation lower. At that time, I would look to re-enter my positions if there's a continuation there, or you see buyers step in and take this higher because you do have some problems on the long end. So that's kind of what I'm looking for now.
I would say we have to ask the question, why is the long end moving up? And in my opinion, the reason for that is the market doesn't like what the Fed is doing at the moment. So Warsh had an initial meeting that was hawkish. He wanted to draw the line and say that this is going to be a new Fed regime and that they're going to come in and show the market that they're serious about inflation. Then came the next meeting, which was basically full on dovish. They didn't hike. He didn't want to comment anything about rising inflation. He didn't want to reveal any sort of a metric that they are using to gauge if inflation is going above target or not, which woke up the bond vigilantes. And the bond vigilantes, they sell the long end. They could also sell the short end, but I think they have much more impact on the long end, which is the 20-year, the 30-year. So if they sell bonds, the yields go up. And essentially, if the reason for the long end yields going up is that they don't like what the Fed is doing at the moment, that means dollar goes down, in my opinion, because the dollar is going to be influenced by a more dovish Fed. So the mechanism for a more dovish Fed in the current market environment is dollar goes down. Bond vigilantes don't like that the Fed doesn't want to hike, and they sell bonds. So bond yields actually go up on the long end. So I'm thinking, whichever way you spin this situation, in my opinion, it all is bearish on the dollar. No matter if the long end goes up or down, I think it all comes down to what the Fed will do. And I think the Fed will just stay flat, keep the rate the same for the whole 2026, which will be interpreted as more dovish because currently we're pricing in at least one rate hike for 2026. So a repricing would be bearish on the dollar. So does that make sense? Because I think I got the mechanism correct there.
Yeah, it seems like you're mostly trading and paying attention to the current driver right now, which is the short end of the curve, which makes a lot of sense. Like you're seeing the short end of the curve go lower, and that's why you're seeing DXY lower. My only question becomes, well, what if the dynamic shifts where the long end starts to be problematic and raises flags to the point where you have the short end become irrelevant, right? To add to your point, like when that one meeting where Warsh was trying to talk down the bond market, they were like smelling that, and the short end dropped, but the long end rose. And so my only question is, like, I think that there is a moment, or there could be a moment, for the long end to override the decision and take it higher. But I don't know what the trigger would be. Would it be, Nick mentioned on the 10, would it be 4.8, 4.9, 5, right? I don't know. And also, too, I do think that there's a lot of potential drivers for the bond market aside just the Fed. Another one Nick mentioned too was Japan, right? Like we had a whole history. It was a great segment. Japan, right? If you have, for example, Japan being the largest customer of U.S. debt, and they are trying to help their situation in Japan by offloading U.S. treasuries, that reduces the supply for that. I'm sorry, it increases the supply for outstanding U.S. treasuries, and the demand goes lower, right? It's basic supply and demand. And at that case, you're going to need a higher yield. You're going to need to offer a higher yield to attract more demand. So I think there's a lot of forces at play here. Now that stuff that could be 3 months down the pipeline. Who knows, right? So for me, I'm kind of in your position where I'm using the 2-year as a gauge, as kind of like a compass here, but I do need to be mindful of those risks. And right now, I kind of would like to just see what happens here at this 200-day moving average. If I could make my life easier and my decisions easier, I would like to get out here at the 200-day moving average or see what happens here. Now, if we blow right past through it and we continue lower, then obviously you have broken some key technical structure for DXY. And at that point, I would just, hold it off to the sunset and I'll just let it do its thing. But if you start to see some complications here at the 200-day moving average, then I would like to secure some profits here and just see what happens, what the reaction looks like. And if it does stall around here, if it just drifts for sideways, I don't want to be a part of that either. So I think it wouldn't do me any harm to just secure profits here and then look at the market from a clear-headed viewpoint, looking at both sides without any risk on the table. That way I can make like the best informed decision I could.
Yep. That makes a lot of sense. And my question is the long end going up bullish on the dollar long term?
I think so. Yeah.
You would say so? Okay.
I would say so.
Yeah. Because that has been the mechanism in the past, but it could get a bit mixed. I think the correlations recently have been changed, let's say, where bond yields going up do not necessarily mean the dollar going up as well. Especially with the bond vigilantes and with the Fed kind of running off track with covering inflation.
I think what would make it a lot easier is you're seeing this clear view of the long end going lower, or the short end going lower, and then the long end going higher. But if the
Yep.
long end goes higher and the short end also starts to tilt in that direction, then that would make it a lot easier to read. So yeah,
Absolutely. Yeah, absolutely. Absolutely. I think that the key number with the sort of the short end, if you go to the monthly chart, I think the key number would be 5%. I
Oh,
think
yeah.
5% would get a lot of people worried. So if we break that, it could be a big sort of shift in the market regime. But in the long end, if you can just put on the long end there, and let's take a look if we have some sort of a clear resistance. Well, it looks like we have broken 5% and are just going up. So there's no clear resistance on the long end there. Interesting. So in my opinion, the best way to go is to sell the dollar for 26. And that sort of selling of the dollar would be purely based on the repricing of the hikes, which in my opinion won't happen. And then once we go through that, then we can rethink the situation and see if there are any other opportunities there. So you're basically staying in your conviction with the current three positions until the DXY hits the 200 EMA. Then you're planning to be flat and see the reaction. Is that right?
Exactly correct. Yeah.
Okay, awesome.
And
Cool.
by the way, too, this right here, there's a lot of what ifs and unanswered questions. Like, does the bond market start to get, or does the market start to get unhappy at 5.4, at 5.35, at 5.5? How long does it take to get there? I think this right here is similar to a Japanese yen intervention, where you don't know when it's going to happen, you don't know how it's going to happen, and you don't know what the reaction is going to be if it does happen. So I say all that with, like, maybe that's something to be mindful of. But again, it's not like I'm going to marry, or I'm not going to overweigh what's going out here and make it be like the sole decision maker for me. So that's kind of, I want to make sure I throw that out there too. It's just something to be mindful of, because, for example, Japanese bonds have been doing this exact thing, right? They've been creeping up higher there. Everyone said, maybe 2.8 was going to be, or 2.5, right? 2.5 will start to shake the market up
Yep.
here. And it's
Yep.
just been moving
Yep.
up higher, moving up higher, moving up higher. Everyone knows it's
Yep.
happening. They see it. But again, when does it start to trigger something? You don't know, right? So same thing with the US bond market story, is that I know that elevated long end would be problematic, but I don't know at what level does the market say we have no more tolerance for this, and I don't know how long that takes or when it will happen. So just want to throw that out there too for the guys in the chat.
And they said after the Middle East started, they said oil will go to like 150, 200, and that it's gonna be an Armageddon, and that the world is gonna completely change. There's gonna be a massive supply shock. That didn't happen, and the strait is currently closed. Oil is elevated a little bit, but like that major shock that everyone spoke of, at least the analysts, didn't happen. It was completely false. So exactly what you mentioned, like expecting key levels to produce a massive change in the market structure or in the market perception is extremely hard and often over exaggerated, because in a lot of cases, like, capitalism finds a way to solve things, like it seems to have found a way to solve the Middle East, because we're kind of behind it now, and the effect is just oil being up a little bit. That's about it.
Exactly.
So, yeah.
Like the consequence is, like, we have oil prices potentially staying at $85 to, or under $90, for example. And the trade-off is you're going to have alternative pipelines. You're going to have, Saudi Arabia has no output restriction, right? They're out of OPEC. You have so many things going on. You got Venezuela's up and running. We're going to go ahead and make sure that thing's up and running and make sure we got the infrastructure for that thing, right? So that's going to help us out. Maybe Cuba's next. You don't know, right? So, like, there's a lot of ways that this is starting to solve itself. Maybe not in the near term, but maybe the trade-off is, like you mentioned, a little bit of higher oil prices, and then 2 years down the line you have self-reliance, or more self-reliance, and not so much reliance on what's going on with Iran.
Yep. Yep, absolutely. So over the weekend, did you think of any new trade ideas? Because personally, I haven't really found much. I'm not gonna say sad, but I did kind of miss out on Aussie dollar. The dollar pair seemed to be pumping today. Like the Aussie seems to be moving up quite nicely. And I was in a small position which I closed for break even last week. So I'm trying to play catch up on the Aussie dollar. And I would like to hold it for a while longer. DXY, in my opinion, could go to maybe 98. That seems to be a decent target for this sort of repricing of the Fed. So Aussie dollar is my pick. It'll be interesting to see the yen. Like the yen, we may get a rate hike from the Bank of Japan on the next date, I think in September. And if they start hiking rates back to back, which they rarely do, usually you'll get a hike and then a pause and then a hike and then a pause. If they do a back to back hike, now that'll tell you a lot about how their stance has shifted on being super strong on the yen. So that's an upcoming catalyst, possible upcoming catalyst. And then we have the Jackson Hole Symposium, I think starting on the August 27th.
Mm-hmm.
But if you saw the title for that, it makes you fall asleep just reading the title. Now, for the viewers, usually the Jackson Hole Symposium was a key turning point in the Fed's forward guidance. It is usually in the past a signal of an upcoming cycle of hikes or cuts or something drastically changes. But this time, you can find the title online. Let me just try and find it here on my screen. Let's see, Jackson Hole Symposium. So the title is Financial Innovation, Implications for Payments and Policy. So it can't get more boring than that. That's why I personally think it can be kind of a nothing burger. And the next big event will probably be the NFP on September once most of the bankers came back to the table and are back from vacation, basically.
Yeah, I agree. We have pretty much a quiet calendar. We have meeting minutes this Wednesday, which,
Yep.
you know, unless you see divergence between everyone or not, it'll probably give us something, but doubt it. You asked the question over the weekend, have I seen any new trade setups?
Yep.
Not
Yep.
really, also because nothing has
Mhm.
really changed in the macro story. Like it's still kind of like dollar bearishness. The hot topic is still gold. So that's kind of what I'm looking at. I will say though, Marco, dollar yen to the upside, I do like 158. If we were to revisit the 200-day moving average, like, let me say this first. I look to exit my positions right around here on DXY at the 200, right? So that's what I'm looking to do. If this starts to hold out and you start to see this, then dollar yen long to me looks very, very attractive. And I try to trade that. Hopefully I can get a feel at 158 or at the 200. And I try to take it to 160 or 163 once again. So that's the only new thing that I have on my book right now that I'm looking at. Everything other than that, I'm just going to continue writing the current trades that I'm in because that's just the theme of the market, which is dollar softening, gold higher, pretty much it.
Yep. I mean, there's not much you can do in August. You know, well, you can get a volatile August, but the norm is August is slow. So I think you're pretty well positioned, and I'm like I fully aligned with most of your positioning. So we just have to ride through the last 12 13 days of August, maybe put on a dollar short position, and I would say that's about it, unless something drastically changes. As far as catalysts go, FOMC meeting minutes won't change much. You know, so we need
Exactly.
an NFP, we need a CPI, we need a PPI, we need the Fed, we need the Jackson Hole thing or something like that.
And that's what we needed in the past. Remember, we needed like all of these inflation prints. We needed NFP to come out. We needed all of these things, and we got it. And so now we have the verdict, which is dollar bearish. So now you got to ride the wave, right? Like don't
Exactly.
like just let it be what it is. So one more thing before my AirPods just died, Marco. So I need to turn up my volume just a little bit to hear you through my monitor. But someone asked you,
no worries.
EuroCAD. One thing I'll say before I head out here. EuroCAD's getting a neutral reading. One thing I will say, Euro is strong, but also Canada is strong as well. So if we just look at this chart here, it's going sideways. I wouldn't want to participate in this. Edgefinder is giving you a neutral reading as well of -3. And Canada just had strong CPI this morning as well, which is giving it some strength. So you're trading two strong currencies against each other, probably not the best thing to do. Again, there's better opportunities out there. So Marco will probably continue on and add to this on his solo segment, but it's short dollar, long gold. If you're not in the trade, just wait for it. It's literally that, quite simple. Like, no need to kind of force something in something lackluster like EuroCAD, where you have two strong currencies working against each other, giving you no trend. But I'll leave it at that, Marco. Thank you so much, man, for your time and for the conversation, and we'll continue it tomorrow.
Thank you, Alan, and I'm looking forward to speaking with you tomorrow.
All right, man. Take it easy.
See you. Goodbye. Stocks have opened, so let's take a look. Let's take a look at some stocks or stonks. Oh, well, the open was not so great. Oof. Yeah, it was a pretty red open. So I am in 4 positions, the ones that are highlighted in the green. RHI, looks like I'm out because it moved the stop to break even. VLO is the only one that's performing okay. CoreWeave, we had a fat blue candle here, which now almost fully retraced. Not the greatest thing I wanted to see. Dell just took me out for a loss, so I'm out of Dell. Looks like it's another fake out or a failed breakout. Probably I should stay away from these crowd trades where Dell and I think HPE were all over Twitter just before they broke out. And if something is very well known, well, fake outs are extremely likely to happen. So the only promising one is VLO. If you're wondering about this strategy, it has a low win rate. So it's a simple stock picking strategy, has a low win rate, 35, maybe 40%, but the reward to risk is pretty nice. So the reward to risk can be 4-1, 5-1, 6-1. Basically, you search for a couple of winners that pay for all of the losses and then some. That's the name of the game. And the key requirement is that the SPY needs to be at all-time highs, or not at all-time highs, near the highs, and above the 50, 20, 10 EMA, clearly trending to the upside, which the SPY currently is. So that's good. The Qs are doing fine as well. Equal weight S&P is very, very strong, very healthy. The mags are looking maybe a little bit flat. Semis recovering. Software doing fine. Oil and gas kind of flat, but maybe starting to break out. You have biotech and healthcare. So I would say the leaders right now is probably software and energy. We can also look at the stock box and see what the sectors are doing. Let's take a look at the sectors. So on Stockbox, you have the top sectors here. It's a kind of a cumulative read on what is moving the best and looking the best at the moment. So you have basic materials, oil and gas, software, bio, tech, retail, gold miners, real estate, energy, transportation. I would say all of that is bullish. My favorite is IGV software and oil and gas at the moment. So XOP. You can find all of these ETFs in TradingView very easily. So if you just create the watch list, put all of the ETFs in there, and then you find the best performers. I don't do ETFs. I search for the best winners in those sectors. So if I'm focusing on software and oil and gas at the moment, I'm going to try and pick the winners from software, from oil and gas. So Energy Corporation, Valero Energy Corporation, that's an example. CoreWeave, that's tech, so kind of correlated. Dell was also tech, kind of correlated. Software. So that's basically that's basic stock picking. Okay, we'll see how it goes. This strategy is still in forward testing, and let's see how this week evolves. I want to briefly mention the sponsor of today's stream, which is going to be Ola Prime. So if you're looking to get funded, if you're looking to expand your trading capital, Ola Prime is 20% off with A1 Live. So all of the links are in the description and they will be posted in the comment section. Now, Ola Prime, definitely do read through the Trustpilot. Again, whatever you buy online, you should always read the reviews. It's the same as buying anything that is used car, buying a house, boat, motorcycle, laptop, okay, anything that's used or anything that is a software or anything connected with trading, read the reviews, okay. Trustpilot is the best thing for this niche, okay. 3.3K, 4.5 out of 5. And when I say like buying a car, I mean if you're buying from a dealer. So if you're buying a used car from a dealer or a new car even, always check the reviews of the dealer. It makes total sense. By the way, so people pay more attention to when they're buying a new car than when picking a spouse or a girlfriend. Or let's say picking out a trading advisor, not a trading advisor, an investment advisor. So people spend time on the wrong things in life. I read it in a book somewhere. So yeah, 3.3K, 4.5 out of 5. See all of the reviews. Look at the 5-star to 1-star and read through them, okay? So read through them. What I like is that they have no consistency rule, which for swing trading is pretty good, and the price is pretty good as well. With the code A1 Live, you get 20% off. Okay, I have 5 more minutes. I'm in Swiss yen, which is not really looking the best at the moment. It's starting to creep up higher. This is more of a long-term bet on a weak Japanese, or sorry, on a strong Japanese yen. What is UJ doing? UJ also kind of staying elevated. I'm looking at, so my stop loss is at 198.055. But for UJ, I'm kind of looking at the 160 level. I'm seeing if there's going to be some sort of a reaction at 160, possibly new intervention, something happening, some sort of selling pressure, or if you want to call it buying pressure for the yen, which should work pretty nicely. If we get an intervention, it's going to be a big move. So, I'm looking at the Aussie dollar, which is pretty nice. Also, Simo says, Marco, when we talked about the MT-09, I went to the gym with a full blacked out one was parked there, sick bike. Yeah, it's pretty cool. It looks really good. Although I think it's not balanced correctly. I think the engine is a bit too big for the chassis. And that's at least what I heard from the reviews. So the MT-10 should be a bit better balanced. But yeah, it looks really cool. Looks really cool. So Aussie dollar, I was actually in a short-term buy, closed it for break even. Probably should have held it and positioned myself for more of a long-term swing position, but I followed the plan. The plan was, if the CPI comes out as the forecast, which it did, I'm going to close it, try and close it for break even, which I did. My long-term game plan is to get into dollar shorts, and the Aussie seems like a good currency. So the Aussie seems like a bullish currency, and you want to play it. You want to play the weakest currency with the strongest. But again, right now a bit overextended. If it pulls back, we'll see. I'll have a think about it. One problem that I'm seeing from now, and today is the 17th of August, we have to wait 2 weeks. Again, Jackson Hole, I don't think it's gonna be that important. I think NFP, CPI, Fed, I'm waiting for that. And if you go to the calendar, news calendar, so let's take a look. The first thing we're gonna get is the NFP. 4th of September. Then it's gonna be the CPI. Then it's gonna be the Fed on the 16th. You can trade the Fed in 2 ways. let me explain that because I actually think it's pretty cool. So you can do the run up into the Fed and post Fed. So what does that mean? The run up into the Fed, that trade is essentially trying to gauge what the market expects the Fed will do and positioning for that. So for the last Fed meeting, most of the market expected for a hawkish Fed. So the dollar actually got bid and we went into risk off going into that meeting. So I think selling the Aussie dollar was a good way to go. Let me just see, where was that or when was that? Somewhere here maybe. Yeah, here it was. So this was the last decision right there. See this candle. So into that, we got the dollar catching a bid. That was the run up into the Fed. The Fed then turned out to be much more dovish than expected, so a big pivot was needed. And if you were quick and if you went long, I bought the Nasdaq, which didn't work out because my stop loss was hit from all of that Leopold crap. But if you're quick, you can pivot and you can go risk on. So that was what happened the last time. So you can trade the run up into the Fed, trading what the market expects will happen, and then you can trade the post Fed, trading what actually happened. Right? So if you want to get updates on this and all of the trade ideas on the 16th of September, well, do make sure you join the A1 Trading Discord. Okay? You can use the code MARCO to get 15% off. This code works. This code works for the Edge Finder and for the Stock Box and for the A1 Trading Discord. So if you want to join me or all of us, it's going to be Nick, Iwand, Chris Pulver, Alan, me, and a bunch of other successful traders. Link is in the description. I have run out of time. Thank you guys very much for watching. You can catch me every single day this week except on Friday when I will be traveling. I wish you good luck and do not go anywhere because we have Tiger coming on in 20 seconds. Thank you and see you in the next one.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Hope you're doing well out there. Happy Monday. Hope you guys had a wonderful weekend. Was at my pool again all weekend. I think I got a little too much sun. It's got me down today, but I'll be okay. Anyway, guys, as always, if you would, please let me know what tickers you're looking at, and we'll definitely go through some of these majors. We did have some Canada inflation numbers come out earlier, and so we could definitely take a look at any Canada pairs you guys might be interested in, because at the end of the day, we have a leader over here. Inflation went a little higher for them, and they have pushed all the way to the #1 spot. This is the beat rate, guys, the 71% beat rate as far as their high impact economic calendar events. Still got the dollar and the yen down there in the basement. China just said, to hell with it. We're going to straight up zero, it looks like. So I definitely like to see that. No, I don't like to see it, but I mean, I like to compare China's beat rate at times to like the Australia dollar, Kiwi dollar as well, since they're kind of correlated, big trading partners down there. So with Aussie at a 60% beat rate, but yet China at zero, sometimes when China catches a cold, Aussie can get one too. Okay. So just something to keep an eye on as far as the economic calendar goes for those respective countries. But yeah, as far as the majors, Japan still in the basement. The Nikkei got sold off for, I think, a second week in a row, according to the latest COT report. In fact, let's go take a quick peek at that and see what I saw. So a little bit of mixed data when it comes to indices, because you had the S&P and you had the Dow that were scooped up pretty decently from the smart money, 2%, 3.07% for S&P, along with the British pound. Okay, so that's going to come in handy because at the end of the day, I think every British pound pair is on our bullish list. So we'll definitely take a look at that. And again, flipping down to the bottom, the Nikkei, like I said, is trailing yet again. I think that's the second week in a row for them. So not looking so good for their stock market over there. But the Nasdaq is down here as well. It was sold off at a 6.85% clip. So mixed data when it comes from the indices. Now, I don't think we have them on our bullish or bearish list at the moment. But even if we did, that's just, it's just another confluence I like to look at. If I have a bullish bias on the indices, okay, great. It would be good to see that the bank scooped up all three of the major ones, but it was just 2 out of 3. So it was just a little bit on the mixed data side over there. So dollar at the very bottom, got some Ethereum, got some yen as well. You got the dollar pairs, dollar CAD, dollar Swiss. We'll take a look at that. Oil giving us a -6 score now, and Bitcoin is down here. So that's a possibility. I was debating that one earlier. I do have a zone. We could look at, but yeah, at the very top, still got pound yen. The yen pairs still a little more volatile for my taste. I'm just waiting on the ATR, the average true range, to kind of come back down a little closer to the normal. Pound, dollar, gold, silver. So we got it all on the list, ladies and gentlemen. Let me see what you guys got up here real quick. NASCAD shorts, says Sarah. Is it Sarah? Yeah, Sarah. Let's take a look at New Zealand CAD. Oops, wrong channel, wrong spot. New Zealand CAD. Oh, come on now. New Zealand CAD. Yeah, there we go. Bearish -4, so just barely tall enough to ride the roller coaster, but we'll have a look at it anyway, and then we'll get on over to some of these other majors and other assets. So New Zealand CAD, so bearish bias, but all I see is higher highs and higher lows on the daily. That's kind of what I see right now. So until we start breaking some of these low structures here, I wouldn't personally be interested in it, because again, do I want to fight the overall structure trend, the high-low trend, the high-low structure? Probably not. So I needed to break some of this nonsense here, break through these demand zones that you see here before I personally have any interest in trying to short. Now, yeah, because you got a 4-hour zone here, you got a 4-hour zone here, and all that's inside of the daily. So just be careful with New Zealand CAD, because the data is telling us one thing, but the chart is telling us another. So they're just not in sync. Not according to the way I want to trade, not, as far as looking at the fundamentals and the technicals. Okay. So until it starts doing what that red arrow shows, that projection line, I just got no interest in it. Okay. The last thing I want to do is show you a good supply zone to short it in when it hasn't even done its work yet. It's structural breaks to the downside and zone breaks. So that's Kiwi CAD for you. And then going back to the majors, since all the dollar pairs are still on there outside of dollar yen, it's still missing in action. It's still pretty well neutral when it comes to the data and everything. They've got their own set of challenges, obviously, with getting the yen supported from the U.S. Obviously, President Trump and Finance Secretary Scott Bessent did tell us a week and a half. What was that? Was that last week or was that the week before? A couple weeks ago, I think it was, that they were going to possibly aid in the intervention of the yen to help them out. And it is funny the way President Trump puts it, because he's like, yeah, they've been a great partner to us, great, good for us. And then he goes outside of Pearl Harbor, of course. So just throwing his normal jabs in there, his normal digs. But yeah, I don't know. I'm just not interested in the yen right now. Not when it's got that hitting. And then, well, not to mention all the interventions that we've seen. So anyway, Aussie dollar still looking to break this overhead zone over here. Now we did break through this daily and 4-hour confluence right through here. So that's a good look. The only thing is now we've already bounced into the daily, the overhead daily. In fact, let me move that almost to the 4-hour. We didn't quite touch the 4-hour, but we have run into one higher time frame, and that is the daily. Let me get my volume put up down here. If we're looking for discounts, obviously we've got a discount down to this, I think, zone that has not been touched. Is that a new one? Let me go draw this up. I got something drawn up here on a smaller time frame, but I wanted to, oh wait, that's not where I meant to draw. I meant to draw down here. This one right here, that's the one I was trying to draw. So a new zone there, but I don't know if the volume picture looks great. So let's get that drawn green so I know I'm looking at demand and not supply. And let's just go dig a little deeper into this 4-hour candle. 4-hour divided by 4 is what? 1 hour. The rule of fours. And yeah, this was that zone that we looked at, I think, last week that had already been touched. See, it was a 4-hour zone for a moment, but then it retraced and then hit the 1 hour. And then what happened? Volume steps in, pushes away. See our VSA candle right here on that leg out, yellow candle. So that's above average volume, tick volume when it comes to currencies, since we don't have our centralized volume picture that we can look at like stocks and other items. So I can't utilize that. That's old news. That's why I deleted that last week. I think I did draw it up for you guys. Over here, we got some zone structures, but no volume, not interested. See, these are the zones I used to go attack all the time. As I used to buy every single supply and demand zone I could get my hands on, kind of like a baby scorpion that doesn't know how to control its stinger, right? But 12 and a half years later, you learn a thing or two about a thing or two, volume, Wyckoff methods, effort versus result, accumulation, distribution, and how the smart money loads up or unloads. So I just don't like these zones because of that. There's no volume. There's no reason to look at it. Okay? And especially now that we've bounced into this overhead supply. So yeah, when it comes to Aussie dollar, just basically need one of two things to happen. Number one, I'd love for it to just fall all the way down here at the bottom. This represents that zone on top of zone I showed you guys last week. You got a zone here, you got a zone here, and it's still pretty well within this mitigated daily. So come down here and give us some love down here. That zone almost touched, or that price point almost touched the zone at the bottom, but it didn't. If I zoom in, you'll see that. But what I love about this is the leg out volume giving me a nice red candle, guys. That's ultra high volume. That's why that's my favorite zone, but it's got a long ways to go just to get down there. Long ways, like a long ways, right? So it may not even happen. It may just keep going up because it is giving us a pretty decent bullish score over here on the Edge Finder, +7. Okay. So I'm only saying what I'm interested in. That doesn't mean it's going to come down to it. But if we break through this current zone, well, then maybe we can reevaluate this and find a different zone. Maybe this gives us a flip zone, right? Former supply, turn to demand, get us a nice bullish engulfing or bullish expanded range candle up with some volume. Well, that would have changed the picture. That would change the structure a little bit. But as it stands right now, just not interested in Aussie dollar unless it goes through some work. Euro dollar is the same thing. We've got this sideways consolidation right here below the daily. Remember, the daily zone got hit and the prices dropped back down, bounced into another 4-hour. Was that 4-hour demand, and started to get our lift up. So it's a very similar picture. I really want to see a decline to that major zone of demand down here that had a red candle coming out. So again, ultra high volume in the creation of this gap. Okay, that's the smart money loading up. So let's get a retracement down to here. Otherwise, just like I just showed you for Aussie dollar, I need to see this picture happen. Break of structure, retest. Maybe we can find a new zone at that point. Okay. I don't like that one because there's no volume. So something else would have to create itself, right? So that's euro dollar. Pound dollar, this is probably the one I like the most right now still. It's obviously given us the stronger score over here between that and the yen, pound, dollar. Okay, plus 13. Gold, silver to follow. We'll get to that in a second. But yeah, over here, I've still got this 2-hour zone right here. Now it's a yellow leg out candle. Okay, so it's still within my what I want to see. It's just a little disappointing it wasn't a red candle because we had red candles for some of these other currency pairs in that same area. But it is an above average volume expanded range candle out with a big, strong gap. So I do want to keep my eyes on this zone in particular. I did draw one up here a little higher up, but it's basically within this equilibrium trap, within this fair market value, the black hole, as you guys hear me refer to these points at times. And most importantly, no volume. So I don't even know why I drew that up. I think I just drew it up to go study it, and then I just didn't delete it. Because here's what we got. We got equilibrium. It's really started a little further back. We had a leg up. So sweep to the top, just so happened to bounce into that overhead supply. And then we had a sweep down to take liquidity from the underside of this. And that's where the liquidity stepped back into the top. So we keep breaking these highs and lows structure, taking out what? Every time? Liquidity, right? So all I'm asking it to do now is just drop one more time, collect these stop losses, these short orders, sell orders that banks need to fuel their buy orders, and then just drop a little deeper into demand. That would be my place. I would want to buy this asset right there, okay? Obviously, we got to look and time the bounce if and when price returns. Do I have a confirmation entry? Do I have a bullish engulfing candle? The whole 9 yards, guys. So that's going to be my favorite one. Let's see here. Yeah, Sarah, you're right. You're welcome, Sarah. Absolutely. 159 to 162 UJ. Yeah, let's go take a quick look at it, even though it's not on the list. So remember, we are still we chewed through this one supply, and we still have that one that's a little higher up. It's been going sideways as well. So it's just basically coming in this black hole of supply. And it's like, what the hell? Where are we going? You know, what are we doing? Have not yet bounced into the, well, hold on a second. That's a 2-hour. I need to go to a 1 hour. Yeah, see the 1 hour picture? See how it's all crisscrossed, going sideways, right? Getting all tangled up. That's not a picture I want to see. That's not a place I want to be either. And that's been ever since August 10th. So what? We're 7 days later, a week later, relatively where we were at last Monday, right? Just going sideways. There's just nothing here. There's not really a data reason to be in here either. Because again, dollar yen is pretty well neutral according to our top setups. All the other dollar pairs are there, but not the dollar yen. So 159 to 162. Yeah. You know, if I had to take my guess, if I had to take my pick, I'd be waiting on that 160.16 area for possible shorts. But again, I just don't have a data reason to take it. Go back to that 4 hour. That 200 EMA is going right through the top of that area as we speak. So could potentially give us a reason to drop, but I'm not willing to put my money on it because after all, after this big 484 pip drop that we had on that 45 minutes of intervention, or well, the 45 minutes that it took to drop this far, well, now we've already retraced about 2.5% to the upside. So now we've got the trend flipping bullish, even though it's still within the, you know, the higher, from the drop, it's the moving averages are still kind of pointing down. So yeah, there's just too much there for dollar yen, and not to mention the average true range I mentioned earlier, that thick red line right here, guys. Remember, we were averaging 65, 70, 75 pip ranges throughout the month of June and July. And then all of a sudden we bounce all the way up to 130. So it almost doubled. It pretty much did double. And it is retracing a little bit, but this is the whole reason I'm just really not that interested in dollar yen. It's still too volatile relative to its average. Now, it's had plenty of times where it has been this high. If we scroll even further back, I'm just looking at this one here. So, you know, wouldn't shock me to see this thing drop at all. Because of the negative data for the dollar. But also you got to remember the geopolitics that could be propping the dollar up. And they're trying to strengthen the yen between the Bank of Japan and obviously the help from the US. So Yeah, there's just too much there. It's kind of hard for me to make heads or tails of. I got to be honest with you. And it's easy to ignore since it's not even giving us a data reason to trade. They're both the two weakest currencies among the majors, right? So if I sell dollar yen, well, then I'd be buying a weak yen, right? Selling a weak dollar for sure, but I just don't like that picture. When I show the surprise index over here, I really like to keep it to where I'm buying a strong currency, selling a weak one. So dollar CAD is a great example, since we had that Canada dollar data that just come out this morning, giving us some beats on 2 of the 3 red folder events there. Your CPI month over month headline number and the trimmed CPI year over year. Median hit expectations on the head. But it's all about those 2 beats. Well, we go over to Canada on their heat map. And there you go. There's today's bullish CPI and 71% beat rate. So what about dollar CAD? What's dollar CAD showing us? Okay. Dollar CAD, as you can see, is now chewing through this 4-hour demand zone I had drawn up. So daily down, lower lows, lower highs. 8 EMA is below the 21 EMA. That's the alligator's mouth opening to the downside. Okay. That's a pretty picture on the daily. So since I know that I have bearish permission, well, now I just need to look over here and find some demand. Well, we chewed through a demand. We chewed through another former little resistance point over here preceding that demand. Well, basically where resistance became support. And now we're pushing through. So it's a good picture. Just need a retracement. Try to find a supply zone. Got a little bit of equilibrium hanging out from here to here, right? So what's above that? A supply zone, right? Now, it's a long ways away at this point. It's about 110, 120 pips away. But this would be another good picture of master pattern coming into play here. Contraction, expansion down to take liquidity. Now I just want to see an expansion up to take liquidity on the top side for these buy orders that are hanging out right here from the short sellers that tried to push price down. Right? This just becomes a game of liquidity at this point. Come up here and take out these stop losses to fuel their sell orders, the bank's sell orders, right? They're going to be selling. This is going to help them out with some liquidity from these stop losses, and then just go a little higher into the supply zone. And that would be my point of sale. Leg out on the supply zone itself was a big expanded range candle, red candle, yellow, volume spread analysis bar. So that's above average tick volume. Okay. Where smart money are likely stepping in to push price down. So all they need to do is have price return to either fulfill the rest of their order or add more to it, add more shorts, because they're going to defend that area, guys. That's why I love supply and demand zones. They want to defend price, because if price goes through those zones, well, then they're upside down and belly up in their positions. Only they're trading a few more dollars than you are, right? So it looks even worse. So they're going to defend those areas. That's why I love zones. That's dollar CAD. That's the picture. But again, it's a long ways away. Who knows how long that'll take to get kind of retraced. We went through the top 3. Kiwi dollar bounced into that overhead supply as well. So just looking for a retracement over here. Yeah. I drew up a zone, guys, on a 2-hour basis, and we did pierce through a little deeper. I don't know if a stop loss would have saved me or not. I would have probably had my stop loss in here. So I avoided that, mainly because I just never got a buy signal. Okay, when price bounced into that zone, I didn't get a rejection, right? That's an easy one to ignore. I didn't have a bullish engulfing candle. I didn't have volume stepping in. It just passed right through the zone, right? That's what keeps me safe on zones, is just by seeing that we didn't have any buyers step in. Right? So that's an easy one just to kind of let slide through and ignore. But anyway, still got that zone down here. That's a ways away. But maybe this supply zone could be the catalyst to help push price down for a possible buy. That's what I'm looking at for Kiwi dollar. Dollar Swiss, 2 sideways. Excuse me. 2 sideways for my taste. Moving averages are pretty well hugging each other again. We have higher highs and higher lows still on the major time frame, the daily. But we got a bearish bias over here on the top setups, right? -6. So until this thing turns around and starts breaking some of these white lines where these structures are created, just like the yellow line suggests, I'm just not interested in it. I could take a short out of one of these supply zones up here. That very well could work. Okay, we had some pretty decent volume on that leg out candle, but I would, according to the way I trade, I would be technically, it'd be a counter trend look on a daily. So I just don't want to do that. Let's see. I think that's it for the dollar pairs. Gold, silver, I think that was up there on the list. Yeah, Aussie dollar. Yeah, we talked about that one. What did you put? Swiss yen. Let's do Swiss yen real quick. And then we'll go to gold, silver, and oil. Swiss yen. I do believe that's on the list. Yeah, +8. Swiss yen is giving me a bearish look. Now, I did recently bounce off of a major demand. Okay. So it looks like that's giving us a little bit of a lift up. Again, it is a yen pair. So the yen pairs were all over the place when it comes to the down here, the ATR, the average true range. It's 128 pips on average right now when it was just averaging in the 100 pip range. So that's actually not too far away from normal, but the next major supply is going to be way up here, which was basically the start of that decline that we saw. So I can go ahead and draw that in. That would be the next target. Yeah, it's just too downtrendy. I just don't like this view right now. Now, when you look at it a little closer on a smaller time frame, well, now we got a series of higher highs and higher lows. So, yeah, you could look at it from that time frame standpoint, but I'm just more interested in the daily. And so far, the daily still is pointing lower. It'd have to break that structure, but which would make sense. Okay, Swiss yen. The yen is obviously the weaker of the currencies. And if we look at the Swissy over here, what's its impact? See, it's at 40%. So it's weak as well. It's down there, not as bad as the yen, but that's weak enough to where I personally would be staying away from it. Gold, silver, I got what, 5 minutes left here? Gold still chewing through overhead supply, guys. We got those 3 candles in a row with big wicks, big rejection wicks before we got that push down on Thursday. It's rebased. It's basically going sideways right now, but I wanted a discount on this sucker as well. I got a couple zones down here. That's your zone on top of a zone much further down. I drew a bunch of pretty pictures up showing a confirmation entry idea for this particular zone. I think that was a 2 hour. Yep. So this 2 hour, okay, volume. This one up here did not have great volume. In fact, I need to delete that. Sometimes I draw these zones and study them, and I just sometimes forget to delete them because, yeah, there's no volume, guys. The structure looks fine. It could have had a better, a better gap, but no volume. 3 nice bars, bounced into the 400 level on GLD, which is also where there was a call wall. And the call wall kind of stopped at its tracks for a while. It did push up and then retrace. So, yeah, sticking with these zones down here. It's a long ways away. Either that or break through the overhead supply, and then we'll find and reevaluate later. But, yeah, when it comes to gold, last thing I want to do is buy right here because we're into that overhead landmine, okay? Silver, kind of a similar situation, still trying to chew through the 4 hour, rest of the daily. So looking for a retracement. What did I draw up here? Daily 4 hour. What was the volume on this one? I don't think it was very great. Yeah. See, we just got a green candle there on this 1 hour candle. I don't know. I don't like this. Again, if I get a bullish engulfing candle with a wick underneath, the smart money start showing their hand by giving me a yellow candle, red candle on the way out. Yeah, I could possibly look at a buy there. But it's going to have to jump through a hoop or two for me. Okay. Oil. We have a low. We have a lower high. We have a lower low. So we bounced into daily 4 hour confluence of supply zones. We also bounced into the top third of the curve, just barely. Just barely curved, came in. But at this point, my moving averages are going sideways. So this is almost turning into, like, if we go to another time frame up, and just kind of a mess. It's kind of a mess over here. Okay? sideways. Again, the moving averages are sideways. I don't want to be stuck in equilibrium. So I need to see another break to the downside, probably even on this weekly, to be quite honest with you, because I just don't like the picture. Don't like the moving averages on the week or on the daily or the weekly. It's too sideways. But for a moment, like I said, we did bounce into that overhead supply. We bounced into the just barely bounced into the top third. Again, as far as the overall curve, that's that green line that you see there right at the 4 hour. We got to bounce to the downside, but at this point, it's just going sideways. So, yeah, not too interested. Perhaps if we bounce a little higher, since it did just barely touch that supply, maybe that's enough for me to give it a second look, since it didn't go no further than about a point or two in. Right? It basically only touched 1%, 2% of it. There's probably still some orders up here. That's the one that we had that big gap down the other day, back on August 2nd. And as always, when you get that gap down, just pretend that that's just one big red candle. So supply, gap down, that's our leg out. Yeah, that's that. That is that, friends. Enjoy waiting. Yeah, gotta wait. Sometimes it might be boring watching some of us say the same thing every day, guys. But, at the end of the day, we're not, trading is, you got to go for quality over quantity with this stuff because, that's how that's the way I got my start. I was buying and selling every single supply demand zone I could find. And then I wondered why I kept losing because, I didn't understand the real structure behind it. Which ones are fake? Which ones are false? Which ones are real? Which ones are institutions creating them? Which ones are just retail traders trading? There's a picture to be uncovered. That's why I like to use the volume, the VSA, the volume spread analysis to kind of help me with that. It's kind of a way to get around the system, get around the lack of volume per se, the regular volume, right? So anyway, guys, it's already time for me to get up out of here. Yeah, stay safe out there. And we'll be back tomorrow to run it back. Take care, guys.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.